We have this situation where growth is slowing, but the Fed is tightening.
The Fed has been very clear. They need to slow the economy down. So the stronger it is now, the more hiking they have.
I believe the Fed targets inflation and believes that by tightening financial conditions, it kind of gets there.
There is an increased probability of a soft landing.
I don't think the Fed's going to be doing much in terms of hikes next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Bramo's back. Literally nothing else matters, Tom. That's
she
it.
hasn't talked to me yet. I haven't even greeted her.
Good
morning, Tom. How's it going?
Oh, thank you, Lisa.
This is a beautiful thing for our audience worldwide.
August.
Good morning, good morning. Futures down 1.2%. TK, the Bears are back.
The Bears are back. It's a real market move day. You're going to have to pay attention, folks. It's not a lazy, sleepy Monday in August. There's some real move. John, I'm going to triangulate right off the top. This is what the pros do. They look at euro dollar. They look at dollar yen, and then they get the other pair, euro yen. And John, it sums up this morning, no surprise, weak euro through parity.
Can we throw European gas into the mix as well, Tom?
That's the why.
As the euro gets sliced and diced, European gas absolutely surging.
And for those, in the laziness of summer, there is a war going on, and it was a challenging weekend, including the bombing in Moscow, John. There's just an overlay here that leads you to a more negative market tone with futures at negative 49.
I said the Bears are back. It's Bramo. Futures down 1%, Lisa. Here we go.
I knew I'd get that. I'd say, I'd come in and people would say, well, the market's down. Of course, you're back. How much are we trying to give positioning a narrative? And I say this because what has changed over the past couple of weeks, other than just people have exhausted some of their short
God,
squeeze,
I miss this.
and now they go back to the fundamentals, which don't look that great. And I think that really is the story, even as people give Jackson Hole a lot of credit for
Ben Laidler calling 3 bull markets back to 2019. Good morning, Mr. Laidler at eToro. To push against the Bramo gloom, Laidler says buy select big tech.
Mislav Matejka on board over at JP Morgan, a constructive note this morning from him and the team. Lisa, Max Kettner on your side over at HSBC. Here's the line from him. Our leading cyclical indicators all point to more broad-based weakness in the second half, with warning signs flashing in the housing market, the consumer, and also increasingly the labour markets too.
And he's not alone. I mean, we heard this over at Morgan Stanley over the weekend as well, talking about overweighting cash because it's a real asset class that gives you actual real yield for the first time in a very long time.
Yeah, I love that.
An increasing number of people are coming out and saying, look, the Fed is going to push back against this this euphoria about some sort of pause. They're going to do it this week. And then the positioning has to reckon with the fact that earnings have not been that great, even though you've gotten that earnings gain from oil companies in particular.
I missed you, Lisa.
Thank you. I missed you too.
Good. It's good to have you back. I know you didn't, Tom, but I did. And Lisa missed me and not you, and that's a beautiful thing.
Yeah, that's great. You guys are in halls and I'm working here.
We're going to Jackson Hole later this week, Tom.
I am?
Can't wait to share the plane with the two of you. Futures on the S&P down by more than 1% on the S&P 500. On the Nasdaq 100 down by 1.5%. Tom talked about that weakness in the euro. Here you are. Euro dollar briefly breaking through parity once again and clinging onto it right now. Elisa, euro dollar negative a third of 1%.
Yeah, and I really find this fascinating. Jordan Rochester, who's going to be on the show later today, talking about how this feels different than the prior foray below parity because the positioning has been washed out and because we are looking at a much more dire situation when it comes to European natural gas. Which brings me to what I'm looking for today. German Chancellor Olaf Scholz going to Canada, meeting with Prime Minister Justin Trudeau. How much will this entirely be about? How much oil Canada can provide? How much gas Canada can provide to Europe? We were talking about natural gas. John, you can see that has reached a new record high. It has more than doubled since June. And this really speaks to some of the concerns still percolating under the surface when it comes to the commodity space, which also brings me to the Pro Farmer Midwest Crop Tour. And Tom, I know you're going to laugh and you're going to take out your sheep journal, but this is actually incredibly important. It's essentially an audit of the farming season in the United States. And this is really important because people don't have a sense with all the droughts, with all of the heat waves, of what this reaping will actually be at a time when we're very concerned about the potential output from the Ukrainian and Russian regions. And aftermarket Zoom Video Communications reports earnings. We have gotten most of the earnings. Zoom is one of the last ones. I just want to give you a sense, John, the round trip here. This is what Zoom has done since the pandemic, surged dramatically, has given up all gains. And we're looking right now at how much potential is there, how much have we gotten ahead of ourselves. This I find fascinating considering the euphoria that people talk about in certain tech stocks. Not all of them. And certainly we've seen some pretty big potholes.
Brutal. Lisa, thank you. And again, Fantastic to have Bramo back in a seat as we count you down to Jackson Hole, Wyoming. We'll depart on Wednesday afternoon, and then we get there a little bit later that night. And then, Tom, the coverage begins Thursday morning into Friday.
It's going to be interesting. We've got a great set of guests lined up, really thinking about what global central banks are doing. John, I think we have to remember that Mr. Powell's the focus, but there's a huge international feel to what the Kansas City Fed does there. I love what Kit Juke says this morning as he celebrates Arsenal doing better than good. And it's Juke says the U.S. dollar heads off to Jackson Hole. Do we have a dollar that's resilient, John, and breaks through DXY, 108, 109, 110?
We have a dollar that's strong, I'd say, Tom, and a euro that's a ton weaker this morning. We'll pick up on that theme in a moment. Let's get the week started in a very, very good way. We can do that with Laurie Calvasina, the head of US equity strategy at RBC Capital Markets. Laurie, I saw your latest note, and I think it's an important one to address. Can you establish a major bottom before we've seen the big EPS forecast cuts?
The truth of the matter, John, is, and I keep getting that. I keep getting that question from clients, and it's not only that you can get the market bottom while earnings estimates are coming down, but if you go back and you look at major periods of stress, like the tech bubble, like 2018, like the 2015-2016 industrial recession, that is often the case that the stock market puts in a bottom several months before you actually flip back into positive revision territory. So I'm not sitting here telling you that reducing earnings estimates further isn't going to be a headwind for the market. I think that it is. But in my mind, it's something that causes us to merely retest the June lows, maybe take another swing low at them. But I think we probably did put the low for this cycle in place in June.
Laurie, where is sentiment this morning?
So someone asked me this question last week, and I said, 85% of the people I talked to are still bearish, about 15% are bullish. It did feel like, maybe over the last couple weeks, that bullish cohort grew from about 5 to 15%. But if you look at the CFTC data and just want to get the quantitative read, I think that sentiment in NASDAQ has become euphoric again. Futures positioning is getting close to the highs that we've seen in recent years. But if you look at something like small cap, the Dow futures, or even S&P futures, we are still very much in the early days of recovering off of an extreme low. In the case of small cap and the Dow, off of new lows that were below a great financial crisis lows. So I think it's a bit of a mix. I think there are some pockets of euphoria, but I do think overall positioning has still been pretty depressed, and sentiment reflects that.
Laurie, what's going to drive small caps higher at a time when you see consumer sentiment falling off a cliff and consumer spending, while still resilient, showing signs of weakening pretty much across the board?
So I think the issue with small caps is that they have very clearly baked in a recession at this point in time. We've gone through a bunch of the numbers. What we have seen essentially is that if you look at small caps against jobless claims, they're already baking in a pretty big spike from here, even with the recent move that we've seen up in small cap recently. Small caps are also baking in a trough-like move, a plunge really in ISM manufacturing that hasn't happened yet. It's probably coming. It's baked into the small cap stocks. But I think the other issue that we see is that historically, longer-term investors know that recessions are usually good buying opportunities for small cap. They sniff out the pain early on. They sniff out the recovery early on. And at the end of the day, small cap is really, I think, the one part of the market that has clearly baked in an economic downturn.
Laurie, over my break, I was thinking a lot about the talk about reshoring or onshoring a lot of manufacturing from China, from Asia, in response to some of the supply chain disruptions. Is this more talk than action? Are you actually seeing this on the ground with small caps?
So I don't think we're seeing it in a massive way yet, but I will tell you, Lisa, in my recent travels with investors, that issue is something that small cap portfolio managers are highly engaged on and highly focused on, particularly when it comes to the industrial sector. And there is a view out there from professional money managers who specialize in this space that will ultimately be a good thing for the small cap industrial stocks. It may ultimately be challenging for margins for the bigger cap companies, but there is a view that this is something that's going to be a tailwind for the small cap space and hasn't really played out yet.
Laurie, I've got you at 4,200 year end on the S&P 500. I've got the market on Friday at the close at 42.28. What now? What do you tell clients?
So look, I think that the argument that valuations are too high right now, I think that's kind of a thin argument for saying we got to peak out right now. I do think it's a concerning data point. It reins in my enthusiasm through the end of the year. We're close to 20 times my numbers for next year and this year. But I do think that, these are year-end targets, John. We're trying to guess where the market is going to be on December 31st, not the high it's going to achieve this year. So I do think that we're setting up for further volatility in the very short term, especially if we get favorable messages at the end of the week from Powell. I could see this thing going just a little bit longer, just based on how low and extreme the positioning has been. But I do think if we're being intellectually honest, we have to set up for some choppiness and volatility through the end of the year.
Laurie, awesome. As always, Laurie Cavacina there of RBC Capital Markets. Kicking off our coverage this week, counting you down to that important speech later this week on Friday. Chairman Powell, 10 Eastern time, Tom, from Jackson Hole, Wyoming.
We'll have coverage there with some good guests lined up here. We're getting guests from England as well for the early morning. John, do you realize when we have to get up?
For local, we go on air, Tom. So
we're on air.
Depending on how much time you need.
Well, I'm in makeup at 2 p.m. and the bars close at 1:30.
I don't think you're getting makeup.
So
I don't think you're getting makeup out in that field where that studio is, Tom.
No, but if I'm at the $1 million bar in Jackson Hole,
who do you think's doing your makeup at 2:30 in the morning?
No,
at the lodge.
If I close $1 million bar in Jackson Hole, I can get makeup there on the way to the.
You're going to stay
set.
up. We call that an all-nighter, Tom. Is that what you're doing?
Well, that's what you have to do.
Lisa,
that's a Jackson Hole tradition.
Lisa, welcome back, because you and I are going to be doing double time later this week when Tom sort of stumbles out of the bar onto the set.
Stumbles out of the bear cave after getting his makeup
Even more
fully
painful,
applied.
folks, is stumbling off the set into the Pioneer Grill for the Huckleberry pancakes.
Literally.
Okay.
Everyone has
John,
a
it's called a full Wyoming. It's
Full
like a
Wyoming.
full English.
Okay.
It's a full Wyoming.
Lisa, you sure you want to come back?
I am here.
You don't want another week off?
Honestly, it's really good to be back, and it's good to take time off as well, partly because you do see some of these other discussions that are being had. Well, maybe you'll find out later this year. I do think that one thing that was really present for me was just how dry everything is. I really am thinking a lot about farming.
You'll go back to your farming roots, aren't you?
I really, this is where it's at right now. I think this is the big story.
We'll pick up on that a little bit later. Lisa's back in a seat. Good news. Alongside Tom Keene, I'm Jonathan Ferro. Futures down by a little more than 1%. Not much good news out there this morning for the equity market bulls. We are lower on the S&P. We are lower on your NASDAQ 100, down by 1.35%. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Traders are betting that Fed policymakers will double down on their hawkish stance at this week's Jackson Hole Symposium. Benchmark 10-year Treasury yields came within a whisker of 3% today. Fed Chair Jerome Powell may use a speech at Jackson Hole on Friday to push back on speculation that interest rates will fall in 2023. In China, the government is trying to alleviate a housing crisis that's getting worse. Banks have lowered their benchmark lending rates and authorities stepped up their support for the property market. That comes days after Beijing said special loans will be offered to ensure stalled property projects are delivered to buyers. And since the start of the war in Ukraine, China has increased its purchases of energy from Russia. According to the latest customs figures, spending on oil, coal and gas has risen from $20 billion a year ago to $35 billion. That increase comes as other countries shun Russian goods as punishment for the invasion. And in the UK, 2,000 dock workers at the port of Felixstowe have gone on strike. It's the country's largest port for handling containerized exports and imports. The workers' union has rejected an 8% wage hike as inadequate. And it's the first big leadership shuffle at Credit Suisse under new CEO Ulrich Körner. He's named Deutsche Bank Treasurer Dixit Joshi as CFO, and Francesca McDonough has been promoted to operating chief. Körner is trying to turn around Credit Suisse and has promised a restructuring plan for the investment bank by November. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
If China opens up significantly after COVID, there will be more pressure on demand. More pressure on demand means upward pressure on prices. So we're watching what happens globally, but we are doing everything possible to try to stabilize supply and demand to keep those prices coming down.
Jennifer Granholm there, the U.S. Energy Secretary on Fox News over the weekend. Live from New York City this morning. Good morning with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures negative 1% on the S&P, on the NASDAQ 100. Down by 1.36%. We are off session lows. Euro dollar off the lows as well. Just about above parity, 100.101 and negative 0.25%. Pretty defensive out there. Yields unchanged on a 10-year, Tom, 296.84 as we race towards Jackson Hole later this week.
Research note of the morning, John, and it wasn't about that goal that Leeds scored with 32 minutes into the game with Chelsea. Worst own goal I've ever seen. John, it was a paper by Ben Nabarro of Oxford and Stanford at Citigroup, out with 18.6% inflation in your United Kingdom, January soonest.
Did I see a 117 handle on sterling this morning, Tom?
Yeah, you did.
118.12 right now. Very briefly, the low 117.82.
For those on radio and TV, that's the statistic of the morning. Citigroup modeling out off energy with the jump in Netherlands nat gas that we see this morning. 18.6% in January is the homework done by Mr. Nabarro over at Citigroup. Right now, we take advantage of the homework that Anne-Marie Horton has done over the years on the continent of Europe, from Moscow on down to Kyiv and on down to Ankara as well. We haven't had a war update in ages, and after the festivities, the tragedies, the battles of the weekend, including, Anne-Marie, this horrific bombing in Moscow, there's a sober tone this Monday morning. I feel like it's the first battle of Manassas, the Civil War. This war's going to be over soon. It's not.
No, it's definitely not. And actually, you have an individual representing Russia in the UN in Geneva telling the Financial Times that they do not expect this to end soon at all. And they're saying that the mediators have really not done their job. And it's an important point because on Wednesday we have Ukraine's Independence Day. They'll be celebrating, and Zelensky is very concerned about that, thinking that Russia is going to have some cruel actions. But also, it marks 6 months of this war that is not ending, that is still raging on, and many are concerned that, like in the past, there's been fighting in the eastern part of Ukraine for the past 8-9 years, that this will continue. That's the outlook.
For our American audience on radio and television, are we funding Ukraine with military material alone? Are we alone in this?
No, but we're the biggest. We are certainly the biggest, but it has been a collective effort across NATO. And you see that across a number of countries in Western Europe, wanting to make sure, especially some of those old Soviet-era military equipment that the Ukrainians are used to using that don't need to be retrained on, as opposed to some of this new American material, that is going into Ukraine. And you see them using it.
Anne-Marie, how does the explosion in Moscow that killed the daughter of a major advisor to Vladimir Putin change the conversation, even as Ukraine says we had nothing to do with it?
Yeah, Ukraine is denying it. You obviously have Russia pointing the finger to Kiev and saying that this is at their hands. I think it just is reminiscent of what you saw in Russia in the 1990s, which was there was lots of bombings, lots of car bombings. And then, of course, when you have the reign of President Putin, it's very tightly controlled, and you don't see a lot of moments like this. It depends on where this is coming from, but it likely would have sent some chills through the Kremlin. This is an individual, Alexander Dugin, who doesn't have a ton of influence directly, but Putin has quoted him before. He is a staunch supporter, this individual, which his daughter was killed, and he was supposed to be in that car. He's a staunch supporter of Russia sending troops into Ukraine, and this political, social, religious idea that all ethnic Russians around the world should be united.
Well, in the meantime, Russia is pausing production or pausing some of the transportation of natural gas once again on Nord Stream 1. This is leading to renewed concerns and part of the reason why you're seeing that surge in natural gas prices yet again in the Euro region. How far are they willing to go? What is behind the latest stop, start, and is this going to be what to expect for the rest of the year?
I mean, there are times when these pipelines do need to go down for maintenance, right? And this says it's supposed to be a 3-day maintenance, but it's very clear that Putin has been using gasoline, has been using natural gas, has been using oil, and he plays politics with it. You know, Halima Croft once said Putin does never let a good crisis go to waste. He thinks this is his only point to have leverage against the Europeans. And the Europeans are obviously incredibly concerned. We're coming off the summer, we're going into the winter. They are already telling their populations they need to conserve energy. And this would be incredibly worrisome for Germany because Nord Stream 1 is really how they get their natural gas. And you had Habeck over over the weekend telling local broadcasters that, again, please start conserving that energy.
What is the distinction that over the last number of days we or Ukraine have focused on Crimea? Is the United States at war with Moscow?
Economically, the Russians would say, yes, this is an economic war, but the United States says this would just be penalties.
But we're providing sophisticated missiles that go a long way, I believe. I'm speaking as an amateur. And rain
right.
down
The United States
on
would say
Crimea.
they are providing defensive weapons, but this is a big debate. Russia believes that they are at war with all of NATO.
Hey, mate, good to have you in New York. Anne-Marie Holden.
She's in New York?
She's in New York. She's next to you, Tom. She's about 10 feet away.
He missed me.
Run away, Anne-Marie. Run away. TK, this one's for you. Explain to Keane that was not an own goal, please. It was a goal by an American, Aronson. It was actually a goal by an American for an American manager,
Yeah, what
Tom.
do I know?
Jesse Marsh. Very cool.
It looked
over at
like
Leeds
I was
United.
playing goal. How much is that goalie paid to put that in? Folks, they're
Few million a
standing
year.
there. and
Edouard
they're-
Mendy.
It looked like me playing.
Tom, he's a big guy. He's a big guy. And the problem is they're under so much pressure from the manager to play it out from the back that the goalkeepers can't do what they used to do, which is just kick it as
Right.
hard as they can up the field.
John, is it modern that when they score, they go up to the fans? I love that they do that versus the distance of the athletes in America.
They've been doing that for a long, long time.
They've been doing
Tom.
that for a long time.
Very, very cool. That the Premiership fans get so close to the players on the field.
I don't even know who's playing. I mean, I can't figure out.
That's a
they
lie. I know that
each
you
team-
watch all the games
John,
over the weekend.
Each team has like 4 uniforms.
What do you mean, Tom?
The kit thing?
Oh, right, yeah.
I
You
don't
have a
even know
home
who's
kit,
playing.
an away kit, and then you have a third.
Thank God Chelsea was in blue. I could actually figure out who they were.
Bramo, did you watch anything over the weekend?
No.
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 Okay.
I'm sorry. I'm just looking at
Can we
it.
have a
reading the Farm
discussion?
Journal. The Farm
I'm
Journal.
telling you, the
Of
Farm
course.
Journal was where
Okay.
it was at. Go on, Tom.
No, the Farm Journal thing was good, Bramo. It's good. Can we have a discussion? Anne-Marie, chime in here. This is important.
Dismissive thing ever.
Should I waste times watching the new Game of Thrones? I mean, this is a serious question.
Oh, the prequel.
You've never seen the original Game of Thrones?
It's too
That's
much time.
un-American.
It's too much time I have to commit.
No wonder you're so weird.
Did you just call Chief White House
She's never
correspondent
seen Game of
weird?
Thrones?
Is
It's
that what you
too
just
much
did?
commitment
So
now.
endearing.
Wow. Welcome to New
David,
York,
should I
Anne-Marie.
see the new one? Help me here. Yes. David says yes.
Keep digging, Tom. Keep digging. You're done. From New York, this is Bloomberg.
Lisa's killing me, just in the commercial break. Confusing Manchester City with Manchester United.
Whatever.
But it was so sincere. Futures right now, down 1.13% on the
both from
S&P 500.
Manchester.
On the Nasdaq 100, down by 1.44%. Weakness at the end of last week, and that weakness spills into the start of this week as we count it down to Jackson Hole, Wyoming. Going into that, let's take a look at 2s versus 10s. 2s versus 10s, as you know, have inverted. Last week, though, your 2-year totally unchanged. Your 10-year actually started to do a bit of work. Yields higher, so that spread, that gap, narrowed again. This morning, though, we break out once more at the front end. So yields higher at the front end by 6 basis points. The 10-year unchanged. Just a little bit more inversion there. 2s at 329, 10s at 297.95. Max Kettner of HSBC this morning, tremendously bearish once more. What's he saying, Bramo? Max underweight US equities and high yield, and maybe considering, Tom, just nibbling DM sovereigns because he is so negative about the outlook into the end of the year.
Oh, there's a huge disparity here right now. We got to get to this important guest, John, but I tell you, the disparity right now in research notes over the weekend was remarkable, and most of it was about x-axis stuff, the length of time, and I wonder if that's really what we're going to focus on with Powell.
I want to finish on a snapshot of Europe, Tom. Euro negative,
You got to show
gas
that
flying.
gas. Wow.
Lisa, this is problematic to say the least. Euro dollar just about holding on to parity. Gas prices in Europe up another 17%.
Yeah, and a lot of concern that the stockpiles are running low heading into the winter season, leading German officials to start extolling the potential for nuclear power to be preserved for longer, so the nuclear plants not to be phased out as quickly as they were. I mean, it just gives you a sense of how the tide has shifted in Germany.
So, Tom, as Lisa pointed out, Nord Stream 1 going down for maintenance at the end of the month for 3 days, and a big worry once again, if it goes down for maintenance, will it come back on?
Well, it's there, and it's a 3.5% standard deviation move, rather 3.5 standard deviation move in Netherlands net gas, John. It's my chart of the year. I'm not going to show it yet, but I had to redo the chart this morning. It's moving so fast.
Tom, the ECB, September 8th,
They're set to hike rates 50 basis points into this mess.
You wonder their voice will be at Jackson Hole, as they usually have representatives there as well. Right now, we get a voice on China. Ian Shepardson joins us. We could talk 15 things with the chief economist at Pantheon Macroeconomics, but the duration of his Chinese slowdown is jaw-dropping. Ian Shepardson models out 24 months at 3 and 5%, make it 4% China GDP. What does that do, Ian, to the labor mandate that Beijing needs and has?
Yeah, it's a problem. I mean, we just cut our China forecast. We just don't see any bottom yet to the real estate disaster. Prices falling, volumes falling. No sign of a fix coming through. And it's a huge chunk of the economy. It's been a big engine of growth for the last couple of decades. And it has not found a floor yet. So it's going to put real pressure on the labour market, real pressure on the authorities. And I think the bottom line is that there'll have to be some substantial policy action from the centre, from Beijing, because the local authorities who effectively right now are being tasked with dealing with this mess just don't have the resources. So the central government, which is resisting, eventually is going to have to fold, is going to have to step in with a lot of public money and try and put a floor under the problem, because if they don't, they're going to find an economy that is way, way weaker than they want for a very extended period, and that's a threat. That's a real threat to them. It's a threat to the global economy as well, because obviously China is such a big part of global growth, especially through the manufacturing sector.
And the ambiguities of inflation, Ian Shepardson, do they export disinflation and deflation, thus making some of the inflation fear calls of the West maybe overwrought?
Yeah, at the margin. I mean, you know, Chinese inflation, PPI inflation, which passes through into Europe and into the US, you know, is really rolling over now. No question about that. But I think it's important to appreciate that the bulk of the inflation shock in the US especially, but also in Europe, apart from energy, in the core, has been through margin expansion, you know, in the retail services sector. So that's not really China contingent. That's really been more a story of booming consumer spending against constrained supply. But you know, right now, central banks everywhere will take anything they can get. And if the slowdown in inflation in China gives them a little bit of room for maneuver, that's great. But it's not going to be the heart of the disinflation story in the US over the next year. And of course, Europe is still struggling with the energy inflation shock, which is much bigger and is likely to be much more persistent. So we've still got some really big problems.
Well, let's talk about UK's whaler, and I don't own the rights to that one. Ian, how bad are things going to get in the UK and across Europe for that matter too?
Well, Europe's in recession now already. I mean, that's pretty obvious now. We see that lasting for a while. The ECB is still going to hike because, you know, the German influence on the anti-inflation story is very intense, so we're going to get it 50 bips at the next meeting. UK is different. I mean, I think there's a reasonable chance that recession can be averted, but only if the new Prime Minister, who presumably will be Liz Truss in 2 weeks' time, takes some more drastic action to bail out households from the energy price shock. So, now that isn't a promise right now, it's a forecast, and you know, I could be wrong. They might not do it, which would be crazy given the pressure that households are under, and that probably would mean the UK would end up in recession later this year. But right now, I kind of think the politics points them towards doing something more aggressive, effectively handing households more money, and with a bit of luck, that will allow the consumer sector to just tick over through the second half of the year and prevent a recession. But it's going to be a close run thing, and of course the Bank of England's still going to be raising rates. So there's a real squeeze going on there, which is unlikely to abate anytime soon. So you know, just avoiding recession, that's not the same as a forecast of everything being okay. It isn't, and it isn't going to be okay for the foreseeable future in the UK. Because you know, even if the energy price thing goes away, you've still got the lingering catastrophe that is Brexit, dragging the whole economy down essentially for the foreseeable future.
Ian, it's a low bar looking across Europe. Just how low is the bar in Europe? Can they avoid recession?
Well, they've got one now. It's probably not going to be very deep or very long, though that does depend to some extent on what happens to energy prices. But they're in recession already. You know, a turnaround probably will come at some point next year, but we've got to get through the worst of it first. So things are a real mess. There's no growth momentum anywhere in Europe. The only place where I can see any growth momentum coming through before the end of the year is probably in the US, and even there it's going to be patchy because the housing market's a catastrophe, manufacturing is under pressure, from the businesses being nervous about energy prices, but it's nowhere near as bad as it is in Europe. And I think that the US is going to avoid recession quite comfortably, which of course is why markets are getting nervous, because they're now thinking, well, you know, the US isn't going to move into recession, and the Fed is not yet talking dovishly, so we've seen this upward pressure on yields again.
Ian, you're making me sound rosy. I'm thinking about this. Housing is a catastrophe. Nothing is positive in Europe. At what point has this been priced in already? And at what point is this something that requires a much broader and more drastic repricing of risk assets across the board?
Well, that's a good question. I think a lot of this is priced in. I mean, if you're not expecting a recession in Europe now, you probably haven't been paying attention. So I think that story is pretty well understood now. The question is, you know, what do we get out of it? I mean, the fundamental problem for Europe is that the rise in energy prices has made everyone in Europe poorer. There's no way to avoid that. You know, it's cutting interest rates or pushing money into people's pockets through fiscal policy is just delaying the inevitable and hiding the truth, which is that an energy price shock in an energy-consuming region makes everyone poorer and makes the economy weaker and hits corporate earnings, and there's just no way to avoid this. You can work through it, you can ameliorate some of the worst impacts of it, but you can't get away from the fundamental fact that if you're an energy user and energy prices go up, you're poorer. And this is much worse in continental Europe than it is in the UK, and it's much less bad in the US, and gas prices are now falling very sharply. But Europe's at the front and center of this because of Ukraine and because of their energy policy over the last 20 years, and they're going to be paying for it for a long time. And so risk assets in this environment, you know, it's very difficult, and it's probably not going to be a very quick turnaround.
Ian, when we talk about the United States and how it's in a better situation, a lot of the notes that I've been reading have been talking about the inventory glut that a lot of analysts are expecting at companies, including big retailers, that have ordered too much stuff, and that this will be disinflationary heading into year end. How much will this be a disinflationary force? How much will this take some of the pressure off the Fed?
Yeah, this is the thing I'm watching more closely than pretty much anything else, because when we had the inventory shortages last year, what we saw was a gigantic widening of retailers' margins, because effectively people were bidding for whatever inventory they could find, especially in the vehicle market where retail dealers' margins tripled. I mean, that's an official number. Retail auto dealers' margins tripled across last year. Now that leaves them at a ridiculously overextended level. So now that auto production is rising because the chips are available again, and now that we've had all this retail inventory arriving on boats over the last 6 months or so, we are in a position now where that enormous margin expansion should reverse, and it could easily take 2, 3, even 4 percentage points off of core inflation over the course of the next 12 months. Now, it kind of surprises me that the Fed isn't talking about this. I'm sure they know it's going to happen, but this margin expansion and contraction story to me has been the big driver of inflation on the upside and will be the big driver of inflation on the downside. Of course, the problem is, you know, for an investor in the consumer sphere, you're looking at retailers, Target, Walmart, we've heard all about them, facing a margin squeeze at really quite substantial proportions over the course of the next year. But you know, again, this, from the Fed's perspective, this is good news, because this is what we need to re-normalize inflation, to get margins back to something that's recognizably normal. It's a long way off, but the return of inventory and the excessive inventory is what's going to bring about that margin compression and drive inflation down a long way.
Can we talk about some almost good news? If only football games ended in the 54th minute, Kieran Trippier putting you up against Manchester City. Ian, what a beautiful thing that almost was.
Yeah.
That's all we get is a yeah.
It was a beautiful thing when he scored. It was right in front of me.
Oh, were you there, Ian? Were you in the stadium yesterday?
It was the best day at St James's for a long time. I was there, yes, it was marvellous.
Why aren't you happier?
Yeah.
Yeah, he is. I mean, this is important to you, too, because I'm going to be in the surveillance nap. But advise us on this game today, Liverpool and the other Manchester. Is this like a huge deal?
Well, Tom, they lost the first 2 games of the season, Manchester United, and they're going against one of the best teams in the Premiership, against Liverpool a little bit later. I imagine they're going to get crushed, based on recent performance.
Like, does the coach go, Ian?
Oh, it's a little bit too early for that, Tom. I think it's a little bit too early for that.
Not this early, bit early, but yeah, bit early. But if it carries on, then yeah, it's a mess.
Ian, awesome to catch up. Ian Shepherdson, Newcastle supporter. almost
They'd
happy
get to lose.
after yesterday's
They'd
performance.
get to lose.
Manchester
Very
United,
happy.
Liverpool a little bit later. Tom's going to be live blogging that on the terminal for you.
People will be looking for that.
Someone's going to actually request that now.
100%.
Wouldn't that be epic? A little bit later.
John,
Quiet Market Day,
John,
TK live blogging.
John,
to the market close.
Damien from
Liverpool,
Turks
Man
and
United.
Caicos emails in. He wants more Leeds chat. There we go.
All right, we'll figure it out. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. China is ramping up support for its troubled real estate sector. Bloomberg has learned that $29 billion in special loans will be offered to ensure that stalled housing projects are delivered to buyers. That would make it the biggest commitment yet from Beijing to contain a property crisis that has led real estate sales to plummet. Former Treasury Secretary Larry Summers wants the Federal Reserve to deliver a stark message on economic pain. He says the Fed should be clear that it will need to impose restrictive monetary policy that drives up the unemployment rate in order to quell inflation. Summers appeared on Bloomberg TV's Wall Street Week with David Weston. President Biden has spoken with European leaders looking to revive a nuclear deal with Iran. The U.S. is considering a response to Tehran's position on the latest proposal. Over the weekend, Axios reported the U.S. wants to calm fears in Israel about a possible deal. The U.S. has said it agrees with Israel that Iran can never acquire a nuclear weapon. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I think inflation's plateaued in the United States, and the strong dollar, lower commodity prices are going to see year-on-year prints continue to go down. In Europe, in the UK, commodity prices haven't fallen in the same way. I think you've got a lot of stagflationary forces that are remaining in Europe, where the US is probably past the worst of that.
That was Patrick Armstrong of Plurimi following the conversation we've just had with Ian Shepherdson of Pantheon Macroeconomics. Ian said, if you're not expecting recession in Europe, you haven't been paying attention. With Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Futures this morning down a little more than 1% on the S&P 500. On the NASDAQ 100, down by 1.5%. Mohammed Al-Arian writes in, love all the football talk, thank you. Hopefully, it will not come at the cost of crowding out the Mets' incredible comeback yesterday. More your speed, Bramo.
Yeah.
The Mets getting it done.
Yeah, there was a whole article in the New York Post talking about the 2022 Mets and comparing them to the 1986 champions and whether we're sort of baked into that kind of reality.
Are you that hopeful?
I mean, a lot of people are. They have the best record
Really?
in the league, yes.
The Mets were they were good in 1986?
Are you serious?
Who did
You're
they
gonna
beat,
get
Tom?
so much
Who
hate
did
now.
they beat, Tom?
I just can't recall. It was too long ago. The ball Lenny Dykstra hit in Game 3 off Oil Can Boyd is still moving up in a vector towards a London School of Economics. Joining us now, it has been far, far too long, Peter Trubowitz, Professor of International Relations at LSE, and of course with Chatham House, and of course an affinity to the University of Texas as well. Professor, thank you so much for joining us. What happens after 6 months in a war? What happens now to the two forces of this war in Ukraine?
Well, Tom, I first want to just go on record saying I'm an old-time Mets fan. So I appreciate exactly what you had to say there.
Thank you, Peter.
You know, I mean, it's pretty damn clear that this war is going to continue going on. It's a long slog. I think the thing that caught my attention over the weekend, actually, I guess it was announced on Friday, was that Biden was going to send another $775 million in military aid to Kiev, and I think the timing of this is no accident. It's both symbolic and it serves a practical strategic purpose. Symbolically, Wednesday is Ukrainian Independence Day. It also, you know, as you're suggesting, is coincidentally the 6-month mark in a war that I think most analysts thought was going to be a romp for Moscow. And so I think in a way this is, you know, the administration is trying to underscore its commitment to Ukraine's security and acknowledge really Kiev's tenacity in the face of long odds. But I want to pick up something that John began with at the start of this segment, which is recession, because I think the administration's announcement also comes at a time when European financial and political support for the Ukrainian case, I would say it's flagging. I mean, European military commitments have not increased since April. Arguably, they're on a downward trend. And European support for the war is not as stout as it was in the spring. And partly this is because of concerns about inflation, the price of food, the price of gas that you were talking about in the last segment, but also fears of recession, which are, fairly widespread in Europe at this point.
Peter, how does the bombing of in Moscow that killed Daria Dugina change the conversation? There was a lot of speculation over the weekend that this could harden the nationalist sentiment and harden it against both Ukraine and the United States. What's your view on how it sort of changes the narrative?
Speculation about the attackers and how Putin is going to respond is rife right now on Twitter. I'm sure you're following it. One thing I think that's pretty clear already from the attack is that Putin's regime looks a little weaker today than it did before the attack. Whether it was the result of a Ukrainian strike, I doubt it, but that's out there, of course, or rivalry within the Kremlin, or domestic resistance to Putin's nationalism, the fact is the attackers succeeded, and this is going to fuel doubts about Putin's ability to guarantee security for those aligned with him. He'll look for some way to strike out, perhaps against Kiev.
Yeah.
He has plenty of reasons for doing that this week, though, to interrupt Independence Day there, but I think this perhaps adds some fuel to that fire.
On the flip side, Peter, there is this discussion, and we heard about President Biden having discussions with a number of the Western allies about reinstating the Iranian nuclear deal, and that's gaining steam and giving some support, and the reason why perhaps oil prices are dipping just a touch, at least that's what the narrative will tell you. How much can that actually replace Russia? Does that further isolate Russia as a pipeline for Europe going forward?
First of all, I don't think there's going to be an agreement anytime soon. Maybe I end up eating those words, but he's got a lot of people to placate inside the region, and it's just hard for me to see from a political standpoint, domestic political standpoint, Biden pushing for this before the midterm elections. After the midterm elections, then I can see them moving on it. That's not to say there's a lot of interest and push inside the administration to make this happen, partly for the reasons that you suggest, alternative sources of energy, but I think also because they think it was a mistake fundamentally to undo the agreement that was struck during the Obama years.
Peter, just awesome to catch up with you, sir, this morning. Thank you. Peter Trubowitz there on the latest in Europe, Ukraine, Russia and beyond. The latest from Citi, Tom, you talked about it at the top of the hour. We've got to go back to that research. Here's the quote. Our latest estimate updated for further 25% and 7% rally in UK gas and electricity prices last week points to a further upside shift in UK inflation. Here's their call for UK CPI to peak at over 18% in January. Tom, 18% after cutting through double figures in the last couple of weeks.
To me, the basic theme, particularly for our American listeners and viewers, John, is just all this gloom and doom about Europe. It's tangible, the war is horrific, etc. Does it redound back across the Atlantic over to America? How strong is America? How alone is America to separate this? John, you're in a timeout chair. I wanted one more question with Trubowitz.
What did you want to ask?
I wanted to talk to him about Game 6 of 1986, where there's all this talk about Buckner, but the reality is John McNamara blew it by keeping Calvin Schiraldi in for 3 innings. And I mean, when Schiraldi went to the plate, and I think it was the 10th inning, I was stunned.
I get my decades confused, Tom. When was Bucky Dent doing the damage to the Red Sox? Was that the 70s?
See how he does that?
Was that the 70s? I find it all so confusing, the baseball history. I know so many people are really good at this stuff.
What's confusing is the Yankees always do it to us.
That was the Yankees in the 70s.
That was Bucky F. Dent, and I believe that was in the 70s. There was a 60s.
Do you want to share what the F stands for?
No. 1967 is when world began. 67 is when the world began. Thank you, Yaz. And then in the 70s, it was challenging. And in the 70s, it was challenging. And then in the 80s, it was the 80s.
It was the 80s. 86. Bramo, thanks for that, just for sharing a little bit of history.
Until 2004.
I was the one who shared
No, thank you, just for taking us there.
Did you get an intern on it? What is the F for? Get an intern on that.
We have this situation where growth is slowing, but the Fed is tightening.
The Fed has been very clear. They need to slow the economy down. So the stronger it is now, the more hiking they have.
I believe the Fed targets inflation and believes that by tightening financial conditions, it kind of gets there.
There is an increased probability of a soft landing.
I don't think the Fed's going to be doing much in terms of hikes next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
The Bears are back, live from New York City for our audience worldwide. Good morning, good morning.
Good morning.
This is Bloomberg Surveillance, live on TV and radio, alongside Tom Keene and the absolutely brilliant and sometimes slightly bearish Lisa Abramowitz. I'm Jonathan Ferro. Futures down by more than 1% on the S&P. TK, it is Europe's summer of discontent.
It really is. This is something, folks, that's gone through the weekend with difficult news in the war in Ukraine. You see it in natural gas priced out of the Netherlands this morning. John, I'm going to use this phrase carefully. These are jump conditions. There's just no question about that.
Jordan Rochester of Nomura, Tom, this morning talking up the prospect of dropping down to 95 on euro dollar after another brief break of parity this morning.
Very sophisticated note, folks. Jordan Rochester saying, look, the shorts were there. They moved the market around the last time where euro weakened under parity. This time is different, and it gives momentum rapidly to a 0.95 and out into the, quote, the winter ever lower. That's,
and if you're just
we're not framed for
Tom,
that.
If you're just tuning in and you missed Ian Shepherdson about 20 minutes ago on Bloomberg TV, Bramo, wow. That quote, basically, and I'll read it verbatim, if you're not expecting recession in Europe, you haven't been paying attention. It's that bad.
It has been that bad, and that has been all of the projections, and that's basically been baked into the euro at this point, or has it, right? I mean, that sort of goes to the Jordan Rochester point. He actually thinks this time is different than the last time that the euro crossed through parity, simply because the shorts and the sort of bearish positions have been more washed out. You have less of a positioning squeeze. I'm still focused on Farm Journal and the drought, and it's not just in the U.S., it's also in Europe, just adding to that summer of discontent.
So Tom asked the right question this morning, and it's a question we asked about 10 years ago when we had the European debt crisis. Can the U.S. economy decouple? Decouple from the weakness we're seeing abroad, and not just in Europe, but in China too?
I don't think Powell will address that at Jackson Hole. It's too sensitive, John. He's going to talk, the usual script we're talking about and all the punditry that we're going to hear, and had a great set of guests lined up as well. But he is central banker to the world, and he's going to adapt and adjust. And was it, I'm sorry, John, my head's a blur with a Costin call from Goldman Sachs, but I think one part of the J.P. Morgan Combine came out this weekend and said, look, they're going to do one more lift and that's it.
The issue, and that was Mislav Matejka over at JP Morgan.
Thank you. I was too busy watching Leeds.
I'm sure you were.
Score that goal. Kick the ball from farther out.
We're going to go to that in a little bit later, all right? Just save the Premier League football talk.
Kick the ball.
Kick the ball from further out. That's his advice for every single Premier League football team. Elisa,
insightful.
When it comes to this Federal Reserve, when this chairman acknowledges weakness, domestically or abroad, he risks coming across as maybe dovish when he doesn't want to. That's what's going to be interesting later this week when we hear from Fed officials. How do they navigate that weakness, which is so obvious for all to see abroad?
So the meeting minutes last week, I was reading through them, and I was reading through the responses, and a lot of people took them as somewhat negative or hawkish, negative for markets and hawkish, even though they were really giving a nod to the concern about raising too quickly and not seeing necessarily the impact until it's too late. How much are they going to double down on that message? And are they going to basically say, look, we're going to hold rates higher for longer, and that will be the issue that will be the sticking point for markets, rather than we're going to raise them incredibly high right away?
We'll kick off our coverage on the ground Thursday morning. Looking forward to that. If you are just tuning in, here's the state of play in US markets. markets. Equity markets down, lower, negative on the S&P 500. Futures off by more than 1%. On the NASDAQ 100, down by 1.4%. We talked about that euro weakness, dollar strength, euro dollar clinging onto parity, negative 0.25%. Crude positive 0.5%, 91.22 on WTI. And your US 10-year, Lisa, basically unchanged, 297.58.
The action really is very much in the commodity space, at least in the natural gas space when it comes to Europe. Today, German Chancellor Olaf Scholz is heading over to Canada to meet with Prime Minister Justin Trudeau. The idea here potentially is partially to increase the imports of natural gas, of oil from Canada. And this comes as natural gas prices in Europe have climbed to new record highs. They have more than doubled since June, just to give you a sense of the summer of discontent and how much it is deepening in the entire euro area. Also today, the Pro-Farmer Midwest crop tour begins and ends on Thursday. Neither of you have taken me up on this. Tom, John, honestly, this to me has been the story of the summer that was most underplayed. It is the incredible drought everywhere. And yes, I am biased because I just came from a more rural area where you can feel it in real relief. But this is all across the world. It's not just the U.S. It's also Europe. It's also over in China, which you're seeing industrial production start to come in. What happens if the U.S. cannot plug the gap in some of the crops from Ukraine? I think this is important.
Her more rural area, there were more black flies than people.
Where did she go?
I went upstate New York, and there actually weren't as many flies because it was so dry. This is my point. It was a new kind of terrain. Anyway, we could go into Farm Journal. I don't think we will, but I actually do think this is really important. Aftermarket Zoom Video Communications reports earnings. A share that absolutely skyrocketed during the pandemic has lost all of that. How much can they really build the audience at a time when people are going back to the office?
Elisa's been away too long. Have you forgotten that you can't discuss something really, really important for longer than 30 seconds without Tom just taking it somewhere less important?
I'm trying because this is actually really important. It's the world's food supply. It has import.
I agree.
Thank you.
Lisa, welcome back. It's good to see you. Chris Harvey joining us now, Head of Equity Strategy at Wells Fargo. That was almost on the edge of line there, Lisa. It's good to be back. Chris Harvey, awesome to have you with us, sir, and I mean that. Chris, you wrote just a wonderful note in the last week, and I reached out to you and I told you that. It really was absolutely brilliant. You push back against this doom and gloom and the people that say this market move we've seen off the lows is just about positioning. You say it's more than that. Chris, can you walk us through it?
Yeah, so John, let's just make a couple premises here. One premise is the equity market is a growth market. The other premise is, we've always said this, we've maintained this, the equity market can rally, right, once the Fed begins to toggle things down. Not that it pivots, right? A pivot is a turn, but when it toggles things down. And that's what they've said. We're going to front load things. We're going to toggle things down. And at the end of the day, if we're going into a growth market, right, what should you see? A slowing economy, inflation coming down, and rates coming down. And that's exactly what we're beginning to see. And what did you see in the first half of this year? You saw massive derating in a lot of these growth stocks. And we think there's real opportunity here. Now, in the short term, it's going to be a little bit choppy, but overall, we're going back into a growth market, and that's pretty positive for equities.
Chris, in your note, you've got a really important insight, and this is something inside baseball, Global Wall Street, which is the fall conference season's really going to matter this time around. So everybody does walkthroughs to the hotels, and they Zoom, and they do that. Explain why this time is different for the boring fall conference season.
Sure, Tom. So a couple things. We're already halfway through, or a little bit more than halfway through third quarter. Right? Third quarter is the last number you're going to get. Right? If you're going to re-exert that bear case, what you need to see is you need to see companies pre-announce to the negative side. You need to see them bring numbers down. You need to see them talk about doom and gloom. And the conference season is going to be chock full in September. So you're going to see companies talk about the underlying fundamentals, the here and the now, right? And if companies do pre-announce, if they do start to talk about economic malaise, it's going to be really sloppy between now and year end. If not, then we can get back on our horse and we can start moving forward, because you're not going to have that opportunity until next year to really talk about numbers coming down, margins getting stretched, and kind of that doom and gloom type scenario. So it's exceptionally important this year.
Until then, Chris, what's the takeaway from the earnings season that's almost complete at a time when a lot of people were saying it was pretty good and you actually saw margin expansion, and you threw a lot of cold water over that and said the margin expansion purely came from energy?
Yeah, so I think what happened as we came into earnings season, a lot of people were ready. A lot of the bears were saying they were getting ready for the I told you so. I told you we were in a recession. I told you numbers were going to come down. I told you margins were going to compress. You just didn't get that commentary. It wasn't that things were great. It's just you didn't get that opportunity. And then underneath the surface, what we were talking about is the curve began to invert. Rates began to go down. And what's that great for? That's great for growth. And you started to see things really improve. Underlying everything is the fact that you had the Fed toggling things down, you had rates going lower, and to us, everything else was a beta, right? Positioning was a beta. Earnings were a beta. A lot of the comment in the marketplace, that was more beta. But the underlying fundamentals, what drive the catalyst, was really about the Fed, was really about rates, and everything else was just helped us move higher, if you will.
So, Chris, let's put a bow on it. You think we've got more upside here on the index, on the S&P 500 into year end, and ultimately that weakness won't come until the front half of 2023?
Yeah, so John, what we've said is our trading range, our short-term trading range is 42 to 43. We got there, we're pulling back. We'll probably see a bit more pullback, a bit more chop, but we do think you're going to end the market higher than where we are right now. We're still sticking to our 4,700. We think the top end of the range is probably 45 to 47. And again, wow. I don't think earnings season is going to be bad. I think it will be okay, but we'll see, right? At the end of the day, we want to take in that information. We'll make our changes, but I do think that we have more upside between now and year end.
Well, I said it to you last week, Chris. It was a really nuanced note, and it was a pleasure to read. Thank you to you and the team. Chris Harvey there of Wells Fargo Securities. Tom, just with a different perspective on things coming through and a more constructive one into year end.
And what we do is you look at the tea leaves here, and John, just moments ago, Euro Swissy is at safe haven, maybe litmus paper of the European system, 0.95987, breaching 0.96. That's strong Swiss franc, and again, that reconfirms the emphasis out there of parity euro.
We got problems in Europe, without a doubt. And what we face in Europe, Lisa, ultimately, is another shutdown of Nord Stream 1 into Germany, and potentially for 3 days at the end of the month. That's what the Russians are telling us. Lisa, the problem and the fear and the question everyone still has is when it goes down for maintenance, does it come back on? And gas prices are surging, and when gas prices go up, the euro's negative, and when the euro's negative, a lot of this is so self-fulfilling, isn't it? It is just vicious.
Because it becomes an inflationary headwind if you have a low euro and you have to import more gas, you have to import more goods. Andrew Bailey is going to be at Jackson Hole, I hear, and I am very curious how he positions this.
Governor Bailey's going to be there?
That is my understanding.
Oh,
yes.
I didn't know that.
Is that exclusive reporting?
No, it's not exclusive reporting.
Okay, I haven't seen confirmation of that.
John, can I do a surveillance enhancement here?
You're going to enhance the show. Go on.
Al from New Jersey emails, and thank you, Al, for listening on Bloomberg Radio in New Jersey.
I never hear from Al from New Jersey.
Bucky F. Dent was 1978. Thank you for that.
Did Al write into you?
He did.
I haven't heard from Al for weeks.
Well, it came in carrier pigeon.
Okay. Old school.
Yeah, old school.
Are you going to share what the F means in Bucky F. Dent?
I got a Harvard intern out. We had a Northeastern intern.
Do some research.
The Northeastern intern said, Tom, I'm not going there. The Northeastern interns all woke. The Harvard interns in the stacks right now researching that F.
Futures down 1% from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Former Treasury Secretary Lawrence Summers wants the Federal Reserve to deliver a stark message on economic pain. He says the Fed should be clear that it will need to impose restrictive monetary policy that drives up the unemployment rate in order to quell inflation. Summers appeared on Bloomberg TV's Wall Street Week with David Weston. Citigroup says that UK inflation is on track to rise above 18% next year for the first time in almost half a century. Citi is basing that on the retail energy price cap, which analysts expect to more than triple by next April. Citi is forecasting that the British government will come up with a $47 billion support package. And 2,000 British dock workers at the port of Felixstowe have gone on strike. It's the country's largest port for handling containerized exports and imports. The workers' union has rejected an 8% wage hike as inadequate. China is ramping up support for its troubled real estate sector. Bloomberg has learned that $29 billion in special loans will be offered to ensure that stalled housing projects are delivered to buyers. That would make it the biggest commitment yet from Beijing to contain a property crisis that has led real estate sales to plummet. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
My hope is that we will get clarity that policy is not yet restrictive, that it needs to be restrictive if we're going to contain inflation, and that we'll need to accept the consequences of that.
That is going to be a major part, a major piece of the conversation later this week in Jackson Hole, Wyoming, at the annual Fed get-together. That was Larry Summers, the former U.S. Treasury Secretary, with Tom Keene and Lisa Abramovich. I'm Jonathan Ferro. Futures are down lower by 1.1%, negative on the NASDAQ 100 by 1.46%. Euro-dollar negative a third of 1%. Said it all morning, just about holding on to parity after breaking through that level once more. 1.0005, Tom, on euro-dollar. And wherever you look, natural gas prices absolutely surging.
This is a day where commodities are really front and center in Europe and driving foreign exchange. There's no question about it, John. I didn't do the math, but it's close to a 3.5% standard deviation move in something that was already moving, Netherlands nat gas. And John, we got to mention it a third time, Citigroup, United Kingdom, 18% inflation.
In January, potentially.
That is...
What a call. Tom, you mentioned the European benchmark gas prices, Dutch futures, up more than 19% this morning.
Yeah.
In a single day.
And the news flow from the weekend. In the last hour, we covered that with Anne Marie Horton. She's our Bloomberg Washington correspondent and continues with us this morning. I want to talk about the loneliness of Addison Mitchell McConnell III. He is from Kentucky. He's been doing this for near 40 years as well. Exactly how lonely is Mitch McConnell into the autumn?
Well, I wouldn't say that lonely, right? He's
not going to get breakfast at Mar-a-Lago.
No, but he's still the leader of the Republicans in the Senate. There's a comment he made last week that I think is reflective of this conversation we're going to be having for weeks leading up to the midterm elections, which is the fact that when you look at the midterms, everyone's talking about a red wave coming in, maybe for the House, but Mitch McConnell was very careful to say not so sure for the Senate. When it comes to Senate races, these are statewide, and you really need, I believe his words was, a seasoned candidate. And a lot of the individuals that Trump is backing are not seasoned. They are very new, and they're a little bit more fringe.
Last week, and I'm sure you missed this viral moment, Anne-Marie, you were probably in planning for one of your 4 international trips before the end of September. They mentioned to me the guy from Pennsylvania, Oz.
Shopping, yeah.
Shopping.
With no cart or basket.
I didn't know anything about this as well. Explain to our audience the level of clumsiness of Mitch McConnell's candidates.
Well, he's not a Mitch McConnell candidate, Mehmet Oz.
But they're on the same side, right?
Yes, but we obviously know there's a big divide within the Republican Party of the establishment, like Liz Cheney, which lost her seat to a Trump backer. But will that happen in some of these big Senate races, like Pennsylvania? Mehmet Oz is very much so down in the polls.
And what's great about this, John, is you and I know Anne-Marie has her asparagus with sparkling water.
with salsa.
Tequila. I thought he was looking for tequila.
And guacamole. Lisa, you skipped last week based on the substance of our political conversations.
I did research on the cart or basket debate. I am wondering, though, why we're hearing about Mehmet Oz and we're talking about baskets versus carts. We're not talking about President Biden campaigning for any Democrats. We're not talking about Kamala Harris at all. Where's the Democratic leadership? How unusual is it for President Biden to be nowhere and not invited to all of these campaign trips?
Well, the Washington Post did a survey about this, talking about some of these very hotly contested races. Do you want the president to show up and campaign for you or not? And I believe the words they used was, I actually wrote it down, unenthusiastic. They got a set of unenthusiastic responses, kind of like, we're not inviting him, but if he shows up, we'd love to give him a tour. So this is really what many candidates are worried about, if this is going to be a mandate on the Biden presidency, and you already see a number of ads coming out in really tight races with Republicans really going after the administration on things like the economy and inflation. So you have these Democratic candidates in these tight races wanting to make sure that they put a lot of distance between themselves and the White House. Now, that is not exactly unusual because most of these midterm elections in a first-term presidency is usually a mandate on that administration. But it could be worse for President Biden because he is so low right now in the polls. And then on top of that, his own party is talking about the fact whether or not some is more openly, a lot of it behind the scenes, that they don't think he should be the candidate for 2024. But on Thursday, the president will be going to Maryland, and this is going to be really the kickstart of wanting to campaign for the midterms. Will he be invited to other places? That's a big question mark.
Anne-Marie, I assume you're in New York because there's nothing going on in Washington. when does DC get interesting again?
I would say early September, maybe September 6th. That's when the president is going to have this huge announcement, almost party for the bill he signed for the climate and prescription drug pricing. And you know what, John? DC is going to get exciting because of the midterm elections, but there's not going to be a lot that is going to get done because everyone is going to be so focused on their constituents at home.
Anne-Marie, I got to thank you for lighting it up on a Monday. I mean, it is August, folks. Let's be honest with that. And there has been an onrush of emails, tweets, etc., on your ignorance over Game of Thrones. And I did a poll out there. I mean, is Anne-Marie like, does she remind you of a little older Arya Stark, or is it Marguerite Tyrell? And Tyrell is coming in. I mean, I can see it. I mean, Marguerite Tyrell. I mean, there's some serious similarities here. You should watch.
I Googled. It'll take about 3 full days. 72 hours to watch it all. I don't know, Tom. You have more time than me on your hands, clearly.
Well, I watched it over time. I mean, I spread it out.
You let that go, Tom?
Yeah, seriously.
That was a serious
that
little,
was fantastic.
a little dig.
Between Bramo and AMH, I'm going down in flames this morning, John.
Okay, this is tough. Anne-Marie, welcome back anytime. You back in the next hour?
I need a vacation.
One after that, tomorrow. AMH in New York City. There we go. Anne-Marie Hordern. TK, futures down 1%. On the NASDAQ, we're down 1.4%. Pretty defensive start to this trading week after a pretty weekend to last week, Tom.
Seriously, are we out 3 big figures on a VIX? No, we're not. But 2.41 and breaching out through 23, John. It is a clearly equity setback. And some of that we've hardly mentioned is off Mr. Costin's note at Goldman Sachs, which sort of set the tone for the weekend.
Quite a story in the bond market, Lisa, though. Your 10-year not really doing much, 297.
I think a lot of this is positioning. I'm not going to give a narrative to it. I am wondering some of the bigger questions. Honestly, Chris Harvey, I'm amazed you didn't nail him on this, Tom. He was talking about how it's all rates driven. It has nothing to do with the fundamentals. That was basically his big takeaway as he talked about the earnings not being that great. Are we all just sitting here waiting for Godot or waiting for the Fed to kind of speak and give us some sense of what's going on?
We're going to fall conferences given by houses where there's beverages of my choice and lousy horse divorce. And we're going, and
What did you just call them, Tom?
Beverages of my choice.
No, that's not what he was talking about.
Yeah, I've never heard them called that, Tom.
No, you go down, you have an horse divorce, and, like the Hyatt is like this so good in the hills. I can't do this.
Take a beat. Have a break. All right? I've got no idea where this is going.
Have some horse divorce.
What was it last week? Vujardé. I do Vujardé instead of deja vu. Anyway, we're down about 1%
the best horse
on the
divorce
S&P.
are in the food court.
Sonal Desai
Bloomberg.
and Franklin Templeton joining us next. This is Bloomberg. Snapping a 4-week winning streak on the S&P 500 last week. Weakness on Friday spills into weakness this morning. Good morning to you. This Monday morning, here's the price action. Down more than 1% on the S&P 500. Down by 1.5% on the NASDAQ 100. 2 reports out this morning. One from Mislav Matejka over at JP Morgan, who says this could be the last big outsized rate hike from this Federal Reserve at the September meeting. And Max Kettner of HSBC basically saying forget that and focus on the economic weakness still to come in the second half of this year. Max Kettner, max underweight this equity market and starting to think about buying this bond market. Take a look at 2s and 10s this morning. Last week, your 2-year, even with all the news, the noise, nothing. Dead flat on the week. Lots of chop, but dead flat on the week. So anchored at the front end. The 10-year started to come up just a little bit. So we started to narrow the difference between 2s and 10s. And then this morning, 2-year back out 6 basis points. Your 2-year 329.09, perhaps contributing to this move lower in risk assets. Your 10-year 297 and unchanged on the day. The weakness still to come. Let's talk about the weakness right now in Europe. How problematic is this? Nord Stream 1 shutting down from maintenance at the end of this month for 3 days. And a big question once again, will it reopen? Will it restart? Gas prices, Tom, absolutely flying. And euro-dollar rolling over. Euro-dollar negative to just about parity this morning.
And it's a different kind of parity than what we saw in the middle of July. Then it was tentative, sort of bouncing on parity. Today it's a nice move down. And from here, who knows?
We'll check out gas prices in just a moment. Euro dollar negative, a few tenths of 1%. That's the cross-asset price action. Let's get you some single names. We can do that this morning with Lisa. Hey, Lisa.
Hey, John. Let's talk about the meme stocks, which have been selling off in a pretty dramatic fashion. There are some fundamental reasons, aside from Ryan Cohen's sale of his shares last week, for Bed Bath & Beyond's declining an additional 10% in pre-market trading after the 40% hemorrhaging of value on Friday. This is because suppliers are actually halting some deliveries or suspending them because they have not gotten the payments in time. There are fundamental reasons for some of the weakness. Whether that actually matters for some of the names that have really ridden on sentiment is another story. GameStop shares down nearly 6%. AMC shares down 31% in pre-market trading. Other shares that we're watching this morning, Zoom Video Communications. We've been talking about how they are reporting earnings later today after the bell. Those shares down about 2%. The expectation here is how much can they continue to add subscribers, add users at a time when, as we were just hearing from Chris Harvey, everyone's going back to the conferences. People are getting back to the office. You can feel this sense that that era is over. And so the adopters have already gone to it, and the others perhaps are using other technologies or just going in person. Wayfair shares down more than 3% after a massive decline on Friday, as well as they start to potentially lay off some of their employees, dealing with some of the slowdown in that sector. And MSG Entertainment, I'm doing this because Harry Styles' concert was last night. Those shares down 2%. They reported earnings on Friday, Tom. But yesterday, I was coming home and I was leaving the train from Penn Station, and I saw these ladies in bell-bottoms and boas, and I didn't know what was happening until I saw what was on the sold out notice on the.
Oh, did you go to the concert though? You didn't make it to the concert.
I didn't have my boa and I didn't have my glitter makeup on my face.
So bell-bottoms the towel for a Harry Styles concert.
Yeah.
Is that the towel?
That's the towel. I mean, it was really uncanny. Everybody was wearing bell-bottoms and boas of bright colors and glitter.
I've noticed the style's changing, Tom. See you in bell-bottoms.
Well, you know, it's fashion's flying.
Beige.
Fashion. We
The man
talked
from
to Dana
Del Monte
Tulsi, and
bell-bottoms.
Fashion's back big time. Celine, I think it's outstanding. They've got a new sweatshirts that don't shrink. It's incredible.
Have they, Tom?
Yeah, it looks good.
It's shrink-proof in the dryer.
Shrink. You put it in,
we'll check that out.
If you put a $900 sweatshirt in the dryer, it doesn't shrink.
Carry on, please.
Joining us now, and this is a really important interview. Sonal Desai is in fixed income, Chief Investment Officer at Franklin Templeton. But far more long ago and far away, when it was price up, yield down, she took the trophy for Morningstar Fixed Income Manager of the Year. Right now, she and others in bonds are just trying to survive. The Bloomberg Total Return Index, negative 14% and rolling over in the last couple weeks, is brutal. Price down and yield up. So now, when does it end? When does the capital loss end for bonds?
I think when they've sold off enough. And I'm not sure they have yet. So the real thing is that we're really playing a game where the market desperately wants the Fed to react the way it's done over the last few decades, but certainly most recently in 2018. The market behaves this way. Historically, the Fed has turned around and soothed it by delivering more liquidity, less tightening, something along those lines. I just don't think that they can. And so when does the pain stop? I think that yields still do need to go up a bit more, quite a bit more actually. And I think that the volatility will continue until the Fed actually can convince markets that it's going to do what it says it's going to do, which is to raise rates.
So, no, I've had the pleasure of following the evolution of your thinking through 2022, and you and I have caught up a few times.
Yeah.
I think what stands out for me about the way you think about this year is that inflation's just going to be so much stickier than so many people expect, and that Fed funds is going to peak at a much higher rate. So, no, could you give us your latest thinking on that, just on where you think inflation's going to be, say, year-end, and how much work this Fed still has to do?
So here's the thing. I think the big divide amongst most of us in the market right now, and certainly amongst most economists, is the extent to which you believe this is all supply-side driven, petrol-driven, so the Russia-Ukraine war, COVID-related supply chains, etc. And those of us who actually believe that the fiscal impulse was large and it had an important impact, and that's what's showing up in labor markets, that's what's showing up in people's spending. Keeping in mind that the inflation we've had so far effectively knocks off 1 month's wage from the average American, it is remarkable how well consumers have held up. They've held up because they've got a lot of resources still, or sufficient resources to ride out inflation for a while longer. So the normal thing of the economy slowing down sufficiently to curb inflation, it's just not happening yet. So in terms of where I see year end, the last time we spoke, I said that we could even get a negative number in July. In the end, we got a flat number on the back of gas prices. I think we could easily see that again. But then again, you see what happened in retail sales. Ex-gasoline, if you look at the control group, retail sales were up a lot. They were up over 8%. So I still see a relatively strong consumer. For year end, I see inflation closer to 8 than 6, which is what most in the market are expecting, because I do see a lot of stickiness in shelter, in a lot of other areas. Sorry, and just to finish off on the issue of gas prices here in the US, at the end of August, the strategic reserve sales actually end. And I am curious what we see in an ongoing way, a continuation of a decline in gas prices or not.
Sonal, one reason why some people say that the market has rallied so much is because Jay Powell didn't push against the rally that they had been seeing, that they didn't seem to be that concerned about a loosening effectively in financial conditions, both on the bond side as well as the equity side. Do you expect that message to change at Jackson Hole?
I'm really curious. Jay Powell has, over the last several meetings, managed to soothe the market perhaps more than is ideal, because clearly the Fed needs financial conditions to tighten a bit. They raise rates as much as they raise them, you get this massive rally in markets, and suddenly financial conditions are looser again, and you know, you're not going to get the cooling that you need. The idea of bringing inflation down consistently, so not just 1 month, 2 months, but consistently back towards their target, is going to require some slowdown, a genuine slowdown, and a cooling off of the labor market, of the economy more broadly. So far, Jay Powell has managed actually always to soothe the market, or the market tries to cherry pick the more comforting sound bites. You know, so that was the lot that he didn't expect many supersized rate hikes. So it just means that you're going to see more rate hikes for longer. The Fed is guiding us towards 3.8, close to 4%. I think they probably need to do at least 4%, a bit more than 4%, not this year, but I see hikes into next year. And there continue to be rate cuts priced extremely quickly. And that's the area where I think I'm most out of step currently with market pricing. I just don't see the rate cuts. You know, do we end at 375? Do we end at 425? That's the smaller question relative to when and how quickly does the Fed start cutting.
I agree.
Again.
Raise and hold seems to be the strategy.
Yeah,
Mary Daly's talking about it. They're not talking about rate cuts yet. Sonal, great to catch up, as always. Sonal Desai there of Franklin Templeton. I mean, can you imagine if they did start talking about rate cuts? We'd have a very, very different market. Tom, I want to talk about gas prices out of Europe. We've got a 17% move intraday. It's important to frame this over the last year. You can see the breakout, the peak in spring, and that's when crude broke out and peaked in spring as well. And we haven't looked back. We rolled over. Gas is still surging. Tom, that chart, is it fair to say it's gone vertical again?
Yeah,
in the last few days.
Language matters here, and I think you can say vertical to it on a standard deviation basis. What's important is this is not a substitutable item. I mean, it's not like we're looking at, you know, the price of Apple or something like that. This is a tangible thing that everyone needs. Industry, and as one of our guests said, maybe Francisco Blanch of Bank of America, that shutting down of that zinc smelter 10 days ago was a real harbinger of what's going to come here.
This is what makes it really difficult. So you've got euro dollar down by 0.4% negative. That's a weaker euro.
Through parity.
Off the back of this difficulty, because Nord Stream 1's going to shut down at the end of the month for 3 days, and we don't know again if it's going to reopen. So at least you get a weaker euro, which means you have to import more inflation. You've got a gas problem. You sell the euro. How do you get out of that negative wheel? That circular story, it's just brutal.
Well, Christine Lagarde will not be at Jackson Hole, so she will not be answering any of those questions, but I hear that Isabel Schnabel will be. And how do you get a sense of where the emphasis is at a time of growing weakness and ECB futility in the face of a lot of it?
I wonder if we can catch up with her, because I have to say, out of everyone on the ECB, she is one of the best communicators.
Agreed.
At the European Central Bank, and I'd love to hear from her later this week. Futures down 1% from New York City. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden has spoken with European leaders looking to revive a nuclear deal with Iran. The U.S. is considering a response to Tehran's position on the latest proposal. Over the weekend, Axios reported the U.S. wants to calm fears in Israel about a possible deal. The U.S. has said it agrees with Israel that Iran can never acquire a nuclear weapon. The US and South Korea have begun their biggest joint military exercise in about 5 years. That's taking a break on large-scale drills failed to lead North Korea's Kim Jong-un to make concessions in disarmament talks. The exercise will involve thousands of troops and will stimulate a response to an invasion from North Korea. A $10 million ad campaign rolling out this week highlights the climate provision in the Inflation Reduction Act passed by Congress. The measure carries historic funding to cut carbon emissions and transition to clean energy. The ad campaign is paid for by the League of Conservation Voters and other advocacy groups. They want to make sure Democrats get credit for the measure going into November's elections. And since the start of the war in Ukraine, China has increased its purchases of energy from Russia. According to the latest customs figures, spending on oil, coal and gas has risen from $20 billion a year ago to $35 billion. That increase comes as other countries shun Russian goods as punishment for the invasion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
You've got three key economies in the world. You've got the US, you've got Europe, you've got China. China, we know, is struggling. We think Beijing, through various sorts of policy, both monetary and fiscal, will come to the rescue. But the question is, when does the inflection point happen? And do we get a big rebound, or is it soft?
Really important questions from Seth Carpenter there, the global chief economist at Morgan Stanley from New York City this morning. Good morning. Tom Keene. Back with us, Lisa Abramovich. I'm Jonathan Ferro. Futures down by more than 1% on the S&P. On the NASDAQ 100, down by 1.5%. Equity softer. Euro weaker. Euro dollar ducking and diving in and around parity. 100.02 and negative a third of 1%. Not much price action outside of that in the bond market. Unchanged on 10s, but moving higher on 2s. Maybe contributing to the move lower in risk assets. And then in the commodity market, it's not about crude. It's about natural gas out of Europe. A move of 18% on my screen right now for European benchmark gas prices, Tom. That's a tricky moment for the European economy.
And worth noting here as well, across all of Europe, the ultimate safe haven, Euro Swissy 0.95831 really gets my attention. That has moved strong Swiss in the last 20 minutes. Right now, without question, our conversation of the week on China. Leland Miller is co-founder, chief executive officer at China Beige Book International. More than anyone I know is wired in to the minutia of China. Leland, do you believe the GDP numbers? Do you believe the new regime under 5%, under 4%, 3-ish GDP?
I don't even think we're going to hit 3%, but it is notable that the data have gotten, the official data have gotten more honest, which is why people are coming around to the idea that, wow, this really is a very weak economy. They're lying a lot less about the numbers, and so people can actually see how weak consumption is, how weak the property sector is, how weak every aspect of the entire economy outside exports has been, and even exports now are fading. So, the data aren't great, but what they are signaling is that not only you're nowhere near the 5% GDP, I mean, you're probably significantly less than half that at this point.
Leland, are we also seeing how little power the PBOC has to really stimulate an economy that already has gotten some stimulus and hasn't really responded?
Absolutely. And, the story actually goes back about, 6 to 12 months on this, because when we were at the end of 2021, beginning of 2022, we actually saw loan demand increase from firms across the country. We saw 4 straight months where loan demand was increasing. And I think firms were starting to get back into it, maybe because it was a party Congress year, maybe because they saw some of the uncertainty going away. But then the COVID lockdowns hit, and they were strangled through that for several months. And then even when the lockdowns have eased, you've seen a refusal to get back into it, borrow and invest and hire. So now that they're dropping rates, had this been done 9 months ago, I think you would have had some sort of kick from it. But right now, all they're trying to do is staunch the bleeding.
Leland, with all of the investors who you speak with, all of the private sector, how much is there a recognition of the reality that you're telling them? How much is there a recognition of what the ramifications of China's slowdown in a much more extreme fashion will have?
We have been screaming into the wind on this. I think people are starting to get this now because the government itself is admitting that the economy is in an extraordinarily weak position. But 2 months ago, 4 months ago, 6 months ago, we'd sit on panels and people on our left would say, there's big stimulus coming. People on our right, the big recovery's coming, party Congress year, all the old platitudes about how the economy would get better simply because of the politics of the country dictated it. That's not the world we live in right now. It's not the Chinese economy that we're tracking. So, I think only when the government started to admit that, look, July got worse than June, lockdowns are easing, the economy's getting worse, all of a sudden a lot of light bulbs going off around the world right now.
Leland, I want to talk about an idea that I learned from the engineer from Lyon, Jean-Claude Trichet. He would talk about how you diffuse policy and economics through a system. You diffuse productivity. You diffuse a fiscal impulse. How does Beijing, given their artificial structure, diffuse a large fiscal plan? How do they actually do that?
Well, I think they're going to have a very hard time doing any type of stimulus, fiscal or otherwise, until COVID's gone, until COVID zero is gone. And there doesn't seem to be any sign of that happening. Right now, lockdowns are easing. So markets thought, oh, well, we're going to see a big bounce back. But what firms are telling us on the ground is they don't want to borrow, they don't want to invest. Now they don't want to hire, which is something new, because they don't see this COVID zero nightmare ending anytime soon. Unless you convince businesses that things are going to get better, you convince consumers that they should be spending, unless you can convince people in China writ large that there's improvement coming and not more lockdowns, you're going to have a very hard time stimulating the economy, no matter what your vehicle for that is.
Meanwhile, I've been focusing all morning, Leland, on the drought and the heat wave that's been taking place across the world, and it's having very real ramifications, not just on food supply, but in China on industrial output. You're seeing this in Sichuan in particular, with them halting production in certain areas because they want to try to save energy at a time when a lot of people are requiring air conditioning. How much is this a smokescreen to cover just a lack of demand and a lack of workers? How much is this something that's very real that will further disrupt manufacturing?
No, I think it's very real, it should be concerning people a great deal, because what has held up the Chinese economy for the last 2 to 3 years? It's been big-time production, it's been manufacturing, it's been exports, while everything else has been weak. Property and retail and services have just been a mess. So what has held the Chinese economy up? It's been this production. Now you're getting hit production on one side from the heat waves that are shutting down hydropower production and causing all kinds of problems from that. And on the other hand, you've got a global slowdown. So the demand is faltering around the globe. This is very concerning. China has got a lot of problems to worry about right now, not just the normal 1, 2, or 3.
Leland Miller of the China-based Book International. Leland, awesome. Good to catch up, sir, as always. That was fantastic, Lisa. And that line at the beginning of that conversation that he mentioned to Tom, they're no longer lying about the data. It's that bad. It's that weak.
And it shows how little power they have to do more. They did make a move overnight, and it did have a little bit of an effect, at least, on lifting the mood in equities. But a lot of this was pinned at trying to shore up support for the housing market, lowering mortgage rates potentially to some of the lowest on record. How much is it actually going to bring people back when that investment has just been completely decimated over the past couple of months and years?
Hugely problematic. Allow me to tee up the next hour. Absolutely fantastic. Matt Hornback of Morgan Stanley will join us to count you down to Jackson Hole, Wyoming. We'll catch up with Jordan Rochester of Nomura as euro-dollar breaks through parity again, 0.9997 right now. Then TK onto a conversation with Dana Peterson of the Conference Board. That's all coming up in the next hour.
Yeah, with Dana, it'll be interesting to see what the formula looks like. Where is the present state of the American economy? John, I really must admit, over the weekend and reading, the idea of an American recession has drifted away. It's still there. I get it that it's probabilistic. There's a chance, but nothing like in Europe. It has really drifted away to some form of
Well, it's more immediate in Europe, Tom.
growthiness.
In Europe, it's right now. In China, there's real weakness. For the global economy, getting closer and closer to what many people would call a global recession, Tom. In the United States, what did Chris Harvey of Wells Fargo allude to? Just the idea they pushed it out, Tom. Maybe not avoidable, but delayed and pushed out to early 23.
Liz Ann Saunders making it clear out on Twitter, the strongest dollar since 1997. Wow.
Euro-dollar parity once again. Euro-dollar negative 0.4%. Your equity market negative 1.15%. For our audience worldwide, heard on radio, seen on TV, this is Bloomberg Surveillance.
I'm uncertain how long this bounce goes on for, but I still think we have a period of significant volatility ahead of us.
The market is doubting in either direction, in line with their own bias, what the Fed's going to do.
I don't think the market's really priced in how bad it can be in Europe.
We do have to realize that where we are in the cycle, things are going to deteriorate from here.
I think it's too soon yet, though, to call it a recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene. It is not August. I mean, it's August. It's boring. It's lazy. Forget about that. An important Monday morning, and it's simple. Europe in retreat, led by natural gas spiking higher.
Winter's arrived already in Europe, Tom. It's problematic. We're going to see Nord Stream 1 shut down for maintenance again at the end of the month for 3 days, apparently, or maybe even longer, and that's the fear. Gas prices surging, euro weaker, Tom. It's not news, is it? Europe's got problems.
We're trying to get to Jackson Hole. We'll do that this week, flying out on separate planes as we are wont to do. But within that is, where is Europe the end of August? John, how does Europe get to Ambrosetti September 2, 3, and 4 on Lake Como? I mean, that seems distant away.
Sounds to me like you want to make a trip to Lake Como, but we'll talk about that in just a moment, Tom. Weakness in Europe, weakness in China, and Chairman Powell's got a speech this Friday. Does he try and navigate the global economy? And if he does,
I don't think
Tom,
he does.
If he does, it's going to sound very, very dovish right now, because the global economy is not a great place. If he focuses on things here in the United States, we've got to talk about financial conditions, because financial conditions, until recently, Tom, have been getting a whole lot easier.
Yeah.
And I think we're all asking the same question. Will Chairman Powell be pushing back?
The Bloomberg Financial Conditions Index, a little bit off the mark today. We'll talk about that in a bit. Lisa, you mentioned it earlier. Governor Bailey will attend Jackson Hole. Maybe Chairman Powell won't be international, but Bailey must address his beleaguered United Kingdom.
How much is there some sort of cohesive thread in how persistent this inflation is going to be, how intransigent it really has become? And I ask this because this Federal Reserve, even to this day, has nodes of the transitory idea still baked into some of the rhetoric. There still is this feeling that it will abate. The market doesn't buy it. The market thinks that the Fed would have to go much further in order to get inflation back down to that 2% target, and it's not going to take a very short time to get it there. At what point do you get some sort of cohesion of central bankers facing very different situations in terms of inflation and their economies?
Here's a different situation, and this is the research piece of the morning. John Nabarro over at Citigroup with an 18% statistic on United Kingdom
number's
inflation.
just scary, Tom. That number's scary.
Scary.
And
I agree.
I'll share the quote with everyone so they get their hands around it properly. Our latest estimate, updated for the further 25% and 7% rally in UK gas and electricity prices last week, got to add on this week too, points to a further upside shift in UK inflation. We now expect CPI inflation to peak at over 18% in January. The big difference, Tom, I think, between the UK, Europe, and, say, the United States is that we're talking about a peak year-over-year CPI that's behind us in America, potentially behind us, and Europe, it's in front of us, in the UK, in a much bigger way.
I'm going to get the data out front, John. Let me go to the Swiss franc because I know you're going to look at the major markets. It is simple. Euro Swissy. It is a new profound Swiss franc through 0.96, 0.95787. That is a massive move for global Wall Street.
Stronger Swissy, a weaker euro. That's the story right now. Tom, euro dollar at parity all over again and breaking through that level a couple of times this morning and trying to cling on once more. We're negative a third of 1%. Yields are unchanged on a 10-year at 297. Crude not doing much in 90.91. In the commodity market, look to natural gas. Up, up, up and away. In the equity market, futures down by more than 1% on the S&P. On the Nasdaq, Tom, we're down by 1.5.
Now joining us, the botanist, Matt Hornbach, joins us, head of global macro strategy at Morgan Stanley. Matt, you lead your note with the 6 rabbits of Wyoming and the rabbit holes that are out there. Which is the rabbit hole that Chairman Powell wants to avoid?
Well, thanks for having me on the program again, Tom. It's great to be back. Look, I think the Fed and Powell in particular needs to get across the message that the job is not yet done. Inflation in the U.S., obviously inflation outside of the U.S., as you just talked about, is still high and rising in certain areas. So the job to bring inflation back down to the 2% goal is far from accomplished. And I think that's the main message that Powell needs to get across. The concern in the market had been that this expeditious move to neutral might continue to be expeditious. And I think in the July FOMC press conference, Powell poured a little cold water on that idea. He kind of suggested that they're getting close to the time that they might slow the pace of rate hikes. And that was taken quite well by the markets. But here we have another opportunity on Friday for Powell to reframe the future of monetary policy. And I think that's what people will be very interested in hearing.
Matt, with that in mind, how does that shape your view of what's going to happen through the FX channel with the US dollar? Matt, you've got that strong dollar call on, you and the team have. It's worked out. What are you thinking now?
John, we think that the dollar has further to go, in part because of what's happening in the U.S., of course. The underlying inflationary dynamics are still strong here, and we think Powell will focus on inflation on Friday. But also what's going on outside of the United States and in Europe in particular. We're seeing increasing downside risks to the European economy. Naturally, what's going on with the natural gas situation is a key contributing factor there. And so we're targeting 97 on euro dollar. We think that there's more weakness to come for the euro and more strength to come for the dollar. We also like dollar yen higher. I mean, that's something that we could see making its way back to 140. But generally, the dollar still has room to strengthen, and that's what we're recommending investors position for.
Matt, how much is this hinging on Fed Chair Jay Powell coming out and pushing back against the feeling that they are going to not go as quickly as people had expected? How does he parse the line between not raising rates as quickly, but holding them wherever they eventually end up for much longer than people are currently pricing in?
Yeah, I think he can do this very simply by just talking about, being in restrictive territory for a period of time in order to ensure that inflation comes back down to their goal. I mean, again, the Fed doesn't know where the neutral policy rate is. It's a theoretical concept. They've got some educated guesses about where that neutral rate is, but they don't know. And I think he could talk about the uncertainty around where neutral is. He could talk about just the need to keep policy in restrictive territory until they're convinced that inflation will make its way back down to the 2% goal. You don't really see that in the price of the market at this point. So that could put some upward pressure on short-term interest rates in the U.S. and keep that dollar appreciating.
So how much is that going to really pressure the rest of the global economy? How much does this become a risk factor, especially as you talk about a 97 on the euro, if you do get an ascendant dollar at an increasingly perilous moment for Europe and other regions?
Well, I mean, in a way, right, the dollar is trying to bear some of the burden of what's happening outside of the United States, right? It's trying to help other countries cheapen up their exports. And I think, that's the market doing what it does best, right? There's these release valves that occur in different areas of the macro marketplace. And I think the dollar currently is acting as that release valve. So, that's something that, is very normal in markets. And we think that the dollar continues to be that bastion of safety that people will come to. And in doing so, help out other parts of the world.
Matt, can I ask you just to wrap things up, as you've thought about where this Fed funds peaks, as the year has progressed, has that number in your mind got higher, lower, stayed the same?
John, I mean, of course, we think that the ultimately Ellen Zentner has this call for Morgan Stanley, and she sees the peak Fed funds rate at 3.5 to 3.75%. So that's the range that she's looking at. The dot plot has it a touch higher, but at the end of the day, we think that the underlying inflationary dynamic in the U.S. is one that raises the risks, certainly to our official call, that the peak rate is higher. And I think the Fed is going to discover data point to data point just what that terminal rate, that peak rate in the cycle is going to be. But for now, they're still going, and that's the main message that Powell needs to get across on Friday.
Matt, got to catch up ahead of Powell on Friday. Matt Hornback there of Morgan Stanley. They look for that stronger dollar. We've got one. They're looking for more of the same. And Tom, when we talk about the balance of risks around where Fed funds peaks, they just gave a little hint there that they think the risks are skewed to the upside.
Yeah, everybody's everywhere. I mean, John, where are we going to be by balance of risks at 10 a.m.? Is it Thursday morning? Is that when Powell
10 a.m.
speaks?
Friday.
First it'll be Friday morning, and if we're still there. And, John, I just think it's just a back and forth.
You planning on
game
leaving
all morning.
before we hear from him? Are you planning on leaving?
No, I was going to take the Gulf Stream, and now I can't because we're getting all sensitive. I got to fly commercial, and these,
Okay, what are we getting sensitive about? Price?
It was like a Taylor Swift thing. We're flying all over.
We bump it up
the place
against
in the
consumer
Gulf
price
Stream.
tolerance. Oh, it's about climate change.
It's about climate change.
Okay, good.
Someone has a celebrity tracker on Tom's personal plane.
Okay, like they track Taylor Swift. You're saying they track Tom like they track Taylor
terrible.
Swift?
John,
That's basically where he was heading with this.
Should I lose a surveillance nap this afternoon, John, to watch Liverpool?
Absolutely.
United?
3 p.m. Tom Eastern Time. Are you still sleeping at 3 p.m. Eastern Time?
Well, it depends. The weekend was arduous. It was a little too...
Yeah, Tom, that's a proper game.
That's this guy, the guy Salah, who I love because he goes right at the net, Mohamed Salah, he's with Liverpool, right, John?
He is, Tom.
And he did an interview here where I love it. He says, he didn't mention Tottenham, but he says these are the two greatest teams history-wise.
Historically, they have the most league titles, yeah.
They actually won where the Tots never win.
Well, the Tots might get something done, Tom, in the next couple of years. Can't believe I'm calling them the Tots.
They're like the Red Sox.
Spurs might get something done.
Wait, whoa.
Antonio Conte, Tom, just transforming the team.
He is. John, who is the Bucky F. Dent of the Tots?
Oh, Tom, give me like 3 minutes to come up with a name.
Sure.
I can't
On
think
the break.
of the top of my
It's a
head.
sophisticated question.
Have we worked out what the F is for Bucky?
No, the kid from Harvard
they're
still
studying.
he's gone. He's out in the Hamptons, I think.
I'll come up with a name for you, Tom.
Yeah.
Futures down a little more than 1% on the S&P. On the Nasdaq 100, down by 1.6%. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Former Treasury Secretary Larry Summers wants the Federal Reserve to deliver a stark message on economic pain. He says the Fed should be clear that it will need to impose restrictive monetary policy that drives up the unemployment rate in order to quell inflation. Summers appeared on Bloomberg TV's Wall Street Week with David Weston. Citigroup says that UK inflation is on track to rise above 18% next year for the first time in almost half a century. Citi is basing that on the retail energy price cap, which analysts expect to more than triple by next April. Citi is forecasting that the British government will come up with a $47 billion support package. 2,000 British dock workers at the port of Felixstowe have gone on strike. It is the country's largest port for handling containerized exports and imports. The workers' union has rejected an 8% wage hike as inadequate. And China is ramping up support for its troubled real estate sector. Bloomberg has learned that $29 billion in special loans will be offered to ensure that stalled housing projects are delivered to buyers. That would make it the biggest commitment yet from Beijing to contain a property crisis that has led real estate sales to plummet. And a jump in apartment construction in the U.S. may eventually help provide some relief to renters who faced soaring prices. According to a study by Listing Service Rent Cafe, 420,000 apartments are expected to be completed nationwide. It would be the second year in a row that the industry tops 400,000 units. That mark was last reached back in 1972. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I think we're going to remain strong at least for the next 6 months. Actually, the euro is holding in relatively well, actually better than many of the other G10 peers. So this is about dollar strength right now. I mean, of course, there's euro weakness in there, and the energy story is really important, but this is about dollar strength.
Jane Foley of Rabobank on that dollar strength. We see that dollar strength this morning in a big way. Euro dollar breaking through parity briefly, coming back, breaking through it again. 0.9996 on euro dollar, negative 0.4% on that currency pair. Equities down by more than 1% on the S&P 500, on the Nasdaq 100 down by 1.6%. Did some research for you, TK. Last time you won the league title, 1961. Last time you won a trophy,
I was younger.
2008.
Yeah,
First time you had a big final, Tom, the Champions League 2019.
Yeah, well,
I remember that, of
painful.
course.
You know, as we get prepared for today, we have to remember there was a point where Man U defeated Tottenham. It was one of the worst defeats ever. I called in sick that Monday. It was April, I think, of 18 or 19. And
I don't remember any
Alexis
of this, Tom.
Sanchez was just killed us.
I don't remember any of this.
We were going to beat Chelsea, but we couldn't beat Chelsea.
Okay, we're talking about Tottenham, but ultimately we're actually looking forward to a bigger game, Tom, at 3 p.m. Eastern
3 p.m.
time.
today. Jordan Rochester will be watching in England. He joins us now with a sharp research note from Nomura International. This is required listening for Global Wall Street. Jordan, I want to know the why right now. The partial differential, is the euro weaker, or is this just dollar flight as witnessed by strong Swiss franc as well?
Well, I think what Jane Foley was saying before we came on, it has been really surprising how, euro's through parity, but it has been mostly a dollar story. Euro hasn't underperformed as much as I think it should. I think the FX market is totally mispricing the situation in Europe. I think credit markets are doing a better job at pricing in the risk. We're seeing credit spreads widen. But in European equities, they essentially say it's going to be a mild slowdown towards average growth in Europe, where every single day we're seeing violet hills in terms of the energy price spike. It's getting worse. The situation for European energy markets, if you look at the past 22 days, 22nd of August today, check the date when I say that, 80% higher energy prices this month alone, 80%. And we've been talking about this for months. They were awful before we got to August. They're now 80% higher. So if governments do nothing, the UK household, if they have no subsidies, and we know they will have, but imagine the world where they don't, they'd be spending 20% of their disposable income on energy bills for just turning the lights on and the heating in their homes. So the situation is a complete rethink of the economic model in the Eurozone. And it's strange for all of us to see the euro selling off so slowly. I think it should be much faster. We'll be testing 97.50 down towards 95 cents in the next few months.
So you think maybe get down to 95? I guess I would ask off the back of that, Jordan, does interest rate policy even matter in this world to this currency, given we're expecting 50 basis points again on September 8th?
Yeah, there is one central bank that matters, which is the Fed. If you look at FX, what's been quite strange is idiosyncratic stories in Europe and all the detail we can go into have been largely irrelevant for the past few weeks at least. All you needed to know was what's going to happen in US rates, and you knew where euro-dollar, where cable was going to go. I think in the winter, it'll be so obvious to everyone there is an extreme recession taking place in Europe that those idiosyncratic factors, this energy story, what's going on for the European consumer will matter. The other factor to take into account is that it's not just about what the ECB does and what the Fed does. You have to take into account the market's inflation premium. So a lot of questions this morning from clients and investors. Why is the euro lower when spreads would actually say, nominal yield spreads would say euro-dollar should be higher? Well, it's because there's now a large inflation component in yields of EGBs and UK gilts. You have to treat it a bit more like an emerging market. Their rates markets are selling off and the currencies are heading lower. That is very different to what we've been used to for the past 20 years.
Jordan, the fact that you think that the euro is wildly mispriced, or the market has underplayed some of the weakness, is in stark divide with what we heard from Ian Shepherdson earlier on the show. He said if you're not expecting recession in Europe, you haven't been paying attention. What is the distinguishing feature of why you think there has not been the recognition that you're talking about in the currency markets to date?
Well, I think the market's just been looking at the Fed. And we had that CPI number and the market pricing a Fed dovish pivot, which kind of has come out the price a little bit. We've seen the rate cuts for next year. At one stage, there was 75 basis points priced in. That's now eased off quite a bit more. It's below 50 basis points, I think, this morning. But essentially, the markets are feeling pretty yellow about the Eurozone. but it's only credit that seems to be reflecting it. And eventually it will feed through to the other markets. It happens all the time. Markets are not perfect. They're not always rational. And they just sometimes need to be given the alarm bells, such as the ECB, for example. Do we really think they're going to keep raising rates next year if there's blackouts in Germany? So that could be one of those trigger moments when the lights are literally turned off for German industry or parts of it, where it just becomes unreasonable for euro to keep the levels it's currently at.
Jordan, this raises an important question, and I'm not comparing the two situations. I just look for a catalyst. Back in the pandemic, we all saw this risk brewing, and the market was unshaken, unmoved. And I think it was that weekend when Italy shut down that people woke up on Monday morning and thought, wow, this is real. It's coming, and it's probably going to come to the United States as well. Jordan, with that in mind, are you thinking of that kind of catalyst? Because, like you say, all of this is so obvious. We're seeing it play out. You can see it on the screen. You see it in the numbers, in the price of gas, and yet very calmly, very slowly, just sort of breaking down again. What's the catalyst you think that's going to lead to the wake-up call?
I think you're right there, John. I think the human mind is a part of the reason why it's difficult for markets to price this in. We are linear animals. We think in linear terms. Where these energy prices are rising exponentially, it's just really difficult for us to comprehend the impact of it. There's another aspect to it as well. We do expect that governments will step in. If they don't, they'll be risking civil strife, essentially. So there is an aspect of the market which says, don't worry, it is pretty bad in energy, but they're going to do something about it on the government's side. The point I'm making is when energy prices keep rising, it's 80% in the past 22 days, it's really difficult for governments to keep up with those sort of moves. And supply is the problem and price is the problem. So there's two aspects of that. The trigger could be, John, essentially when Germany triggers phase 3 of its gas ration plan. At the moment, it's slowly going to give up the cost to consumer. We've had some mixed moves from Germany, so we've got an energy levy coming in October, but they're also cutting VAT, so it's kind of offsetting it to some extent. When phase 3 comes in, the government actually just needs to do demand destruction policies, literally saying, you there, you can't turn on your industrial plant. You need to turn down your gas usage. When that happens, it becomes much clearer to everyone that the Eurozone will use a lot more imports to help their supply chains continue. Factories will still want to keep producing, keep their jobs. But for certain products like steel, aluminium, glass, ceramics, plastics, chemicals, anything that's at the lower end of the supply chain but very highly energy intensive, will just get imported from America, from China, where energy is much cheaper. Yeah. And that's going to weigh on the euro even more.
Jordan, I've got 10 seconds. Price target, Manchester United, May 2023. What are you thinking?
May 2023.
Season's over. Where are we going to be?
For relegation, fans still annoyed.
Jordan Rochester of Nomura. Hey, Jordan, good to catch up. What are you more interested in there, TK? The Manchester United price target or euro dollar?
What colour's
the
sky?
I think what colour's the sky?
Right now, I mean, come on. These both teams are flat on their backs. They're both going to be fired up.
Live from New York City this morning. Good morning with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures down hard, off by 1.2% on the S&P. On the Nasdaq, off by 1.54. Weakness Friday, weakness this morning. Yields down about a basis point on a 10-year, 296.29. Euro dollar down 1/3 of 1%. We've had a break of parity a few times this morning. Right now, right at parity, 100.03. And gas prices, the culprit here, up 18% on the day, on the month. The last 30 days, Tom, up almost 80% over the last 30 days and clean through the peak of earlier this year.
Yeah, that's a key thing, right through the peak. I mean, it's got a life of its own. And, John, it's a 3-point-X standard deviation. So it's, you can say it's a jump condition move.
Well, I think what Jordan Rochester was getting at, Tom, of Nomura moments ago, who, by the way, is looking for downside to 95 potentially on euro dollar, is that perhaps, Tom, we're not quite sure how to process these monster moves in European gas prices and what it could mean for GDP destruction, demand destruction later this year.
We've got to separate here, folks, and I get it that there's big figure discussions in foreign exchange, how to make money, or, if you're hedging, how to not lose money. Jane Foley at Rabobank talks about that a lot. But, John, a huge part of this is just what it indicates about per capita GDP slowdown and the agony that's going to be out there. And it's not just about one country or even one region. When you fold it into what's going on in China, it's grim.
The good news out of Germany in the last week or so, Tom, is that they've got their storage capacity, got their storage levels up in a way that they were hoping for just a little bit earlier. But that is a small ray of light, given the darkness surrounding that economy going into year-end, Tom. And Jordan was talking about the next phase of gas-saving efforts out of places like Germany. And, Tom, ultimately, it's demand destruction. And maybe that's the point where we start to wake up to what Europe might be facing later this year.
All we can do is look at the markets, and we'll do that in economics, finance, investment, international relations as we can. Right now, with a good brief on what will greet Chairman Powell at Jackson Hole is Dana Peterson, chief economist at the Conference Board. She's extremely good at melding in the sentiment, emotions with the actual math that's out there. Dana, in your research note, you do a partition that I do all the time, which is the GDP equation, and there's a domestic component, and then there are foreign dynamics as well. Is the domestic component, domestic final sales, whatever, is that in recession right now?
Well, certainly in the second quarter, it was slightly negative. And so looking at the third quarter, the data that we're getting, certainly out of our leading indicators, which has fallen for 5 consecutive months, is suggesting, yes, maybe that's also negative as well in the third quarter. And certainly we've already called for some time that there's going to be a recession in the U.S. at some point before we reach the end of the year. Our hard forecast is the fourth quarter. Maybe it's happening even right now in the third quarter.
Does strong dollar hurt our listeners and viewers?
Well, actually, the strong dollar is great for bringing down inflation. It means we can import things much more inexpensively, but it certainly does hurt our exports, which are, if exports are positive, then that's constructive for GDP, simply because our products are just too expensive abroad. The good news is that the U.S. really doesn't export that much compared to other economies, but still in all, a strong dollar is good for bringing down inflation.
Dana, we were talking to Sonal Desai earlier, and she expects inflation to come down this year to all of 8%. It's not really that much of a decline. Do you agree that it's not going to really decline all that much in the United States?
Well, we do have inflation softening. We figured that the peak happened in the second quarter. Maybe that's true. But certainly when you look at the components, things like food prices, they're being affected by global activity, certainly very bad weather events, and that's something that's outside of the Fed's control. Also, when you're looking at services, a big chunk of that is housing, shelter costs, and even though housing activity has slowed, prices are still very elevated, and that shows up in rents, both actual and imputed, but with a lag. So we could potentially still see some pressure on services going forward from housing.
Dana, you mentioned weather, you mentioned food. I have to go there because nobody else will go there with me this morning. I've been talking about this all day, the drought and the lack of some of the farming or supplies that people have been talking about. How big of a concern is this in terms of food prices and what we could see in the fall?
We're very concerned. And indeed, it's not just a U.S. issue in terms of droughts and lack of water. It's happening in Europe with very elevated heat, and also in China. We're seeing these food crunches happening even despite the war in Ukraine, which has also placed a lot of upward pressure on food prices. And so we're hearing from CEOs that they're going to continue to push through higher costs for food. And so that's probably going to continue to be a pressure that the Fed really doesn't have much control over.
Well, Dana, our headline today is out of Citigroup in United Kingdom with hyperbolic energy prices, parabolic energy prices, I should say, and they're looking at 18% inflation. Recalculate the Conference Board's inflation guess for our listeners and viewers. Do we stay at 8% inflation?
Well, our hope is no, and certainly you see there's some underlying things that are starting to come off. Certainly when you look at autos, inflation for autos are coming off. Some of that's because people just couldn't find cars, but also because it's much more difficult to finance a car. And certainly goods, many people are moving away from goods towards services. Now the pandemic's more or less in the rearview mirror. And so that means prices are going to be coming off for goods. We're already seeing a lot of discounting.
What's your blended number? Don't make it a mystery here. Chairman Powell's listening. What's your blended number on top line inflation forward? And do we come down and stop at 6% or 4%, whatever?
Well, we're probably going to see inflation above 5% by the end of this year.
Really?
And still that's very very, very high. And we don't have inflation getting back to the 2% target until sometime until 2024. So that's a very extended period of inflation, well above 3%, well above 2%, which is the Fed's target.
Dana, how important is the nature of that inflation? We're just seeing now that U.S. natural gas futures are rising really substantially in tandem with what we're seeing over in Europe to new 14-year highs. How much does this lead to a bad inflation that will necessarily cause a recession akin to what we're seeing over in Europe versus wage gains and things that can really foster a little bit more of a positive spiral?
Well, the thing about wage gains is that that just gets passed on into inflation. Why? Because the very same people who are getting those wage gains are also employees of companies that are saying, look, we can't absorb or we won't absorb these higher costs, and so we're going to pass on to the customer. And then you start having a wage price spiral, which is very negative, something the Fed does not want. And certainly when you're looking at energy prices, I mean, that's going to really eat into the budgets. It's already doing so, but certainly into the budgets of your average American. And so all of that bodes very poorly, certainly for the consumer and also for businesses.
So on the flip side, Dana, how much are you concerned about the housing market weakening and some of the sentiment drag that it will have on consumers that has not really been felt yet in the United States data?
Well, I mean, the housing market weakness is par for the course. The Fed is raising interest rates. We had very limited supplies and very high prices. All of that shakes together into an outlook that's very negative for housing. And we have housing, we've already seen housing activity come off. We think it's going to continue to weigh on the economy, and that's going to contribute to the recession that we're forecasting.
Hey, Dana, and this is the Conference Board does this so well. Paul Krugman with a fantastic essay this weekend on the durability of rent inflation. Do you agree with Professor Krugman there's a durability of rent inflation?
Well, if he means that there's a lag, a very long lag where prices, valuations rise now, and then you see that showing up still, 6 months now, that's certainly 6 months from now, that's certainly accurate. And we think that there's going to be this persistence in terms of rents pushing up inflation. That's part of the reason why we don't have inflation getting back to the 2% target very quickly.
Dana, that's the stickiness we're all thinking about. Dana Peterson there of the Conference Board. Thank you.
Depressing.
This nat gas move in the US, the gas move over in Europe, the thoughts, Lisa, of a recession in Europe being almost unavoidable. Almost unavoidable. And what was that we heard from Ian Shepherdson to start the program earlier this morning over at Pantheon, that if you're not expecting one, you've not been paying attention?
How can you see anything other than that if you're looking at the high price of natural gas, if you're looking at double-digit inflation? In Germany, that was the prediction from the German central banker to the ECB, 18% potentially inflation rate over in the United Kingdom as per city. How do you see this ending well, right? And so then the question really becomes, how deep is the decline and what have we actually priced in already?
So we've got a great lineup in the next hour to talk about this, because it's easy to get gloomy about Europe at the moment. And we'll do some of that with Tony Rodriguez of Nuveen and Kathy Jones at Charles Schwab. Tom J. Pawlowski of TPW. Awesome timing for this conversation around 9:30 Eastern time.
This, folks, this is really important. Pawlowski is someone who's a student of the Pacific Rim. And basically what he's saying, and clearly, John, I've said it, at some point this COVID nightmare is over and the Pacific Rim will move on.
Does China have bigger problems, though, than this COVID nightmare now, Tom? I would suggest they do, based on the incoming data.
Yes, I'll go there, John, but I think it's underestimated how things will get solved in their number one mandate, which is to employ bodies. If they figure out they've got to do a Western COVID strategy. They're distant from that.
Well, to your point, though, there has been this big discussion about reshoring or onshoring or businesses moving away from China in light of some of the zero COVID. Do they all come flooding back after this? How big has the move been? How sustained has that exodus been that a lot of people have been talking about?
Yeah.
I do wonder how much that creates a structural pressure for China.
Yeah, John, you and I don't talk when we're off camera, but what's your thoughts on Man U Liverpool this afternoon?
I think Man United, Tom, could be looking at their third loss of the season. Yeah. 3 games, 3 losses. Bottom of the league after 3 games, potentially, Tom.
Wow.
Not a pretty sight for that football club.
That would be like the Yankees in last
with
place.
Just a little bit more time before the transfer window closes. They've got to work out what to do with Cristiano Ronaldo. They've got to work out who's going to come in. And Tom, at this point, who wants to come in? Who wants to come in?
Ronaldo?
Is this you guys talking offline? Basically, you don't talk after the show.
The thing that I have about this, Lisa,
we never talk after
is that
the
people
show.
actually write in and think we don't get along.
We
I know.
don't.
And yet then
we?
when they see us on the street walking to breakfast together, they can't believe it.
They can't believe it.
And I'm always polite
Cars
to
drive
everyone. I
into
always
light
say
posts.
I'm always polite. I always tell people this.
Yeah,
They come up to me.
What does Tom
Thank
say?
you so much for listening.
What does Tom
Thank you
say?
so much. And do you know what Tom turns around and says? Get a life. He tells people to get a life. Get a life.
We were at the St. Regis.
That's how you treat our
Lisa.
audience, Tom.
John and I were at the St. Regis
endearing.
on Redo's Amex, and the coffee. The guy almost spilled the coffee when he saw us together
From New York,
on the linen.
this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden has spoken with European leaders looking to revive a nuclear deal with Iran. The U.S. is considering a response to Tehran's position on the latest proposal. Over the weekend, Axios reported the U.S. wants to calm fears in Israel about a possible deal. The U.S. has said it agrees with Israel that Iran can never acquire a nuclear weapon. Since the start of the war in Ukraine, China has increased its purchases of energy from Russia. According to the latest customs figures, spending on oil, coal and gas has risen from $20 billion a year ago to $35 billion. That increase comes as other countries shun Russian goods as punishment for the invasion. The U.S. and South Korea have begun their biggest joint military exercise in about 5 years. That's after taking a break on large-scale drills, failed to lead North Korea's Kim Jong-un to make concessions in disarmament talks. The exercise will involve thousands of troops and will simulate a response to an invasion from North Korea. Adidas says that CEO Kasper Rorsted will step down next year, and the search for his replacement is underway. According to the German sports shoe company, Rorsted and the board had mutually agreed he would leave. He'll stay in place until the new CEO is found. Rorsted came to Adidas in 2016. Several weeks ago, the company issued a profit warning. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
You have the, Fed Chair Powell saying we're close to neutral at the press conference, and then every Fed governor comes out afterwards and essentially contradicts him. So it would be nice to have a much more consistent communication strategy, because you're right, the market is doubting in either direction, in line with their own bias, what the Fed's going to do, and they're not helping.
Stephen Chivaron, a very intelligent conversation there with Federator Mez on the equity market. We've been buffeted by Europe today, by parities. Euro dollar right now, 0.9997. Tom Keene and Lisa Bramwitz with us. We need to get to a chart. Let's do that right now. Kriti Gupta with us. Kriti, what do you have?
Yeah, Tom, let's talk about just how sustainable or how believable this rally has been since the trough that you saw at the end of June. The S&P 500 has rallied some 19% from that trough. Let's talk about how it's being viewed, though, from professional investors. In fact, they've never been so short as they are right now, since going all the way back to 2016, which brings me to my chart of the day. We're looking at S&P 500 net long positioning, or I should say net short positioning, their net position, basically, between asset managers and leverage funds. And that in short position, like I said, it has never been so short going back to 2016. The question right now is how much of that 19% rally that you really saw is rallying simply on low volume, Tom?
Interesting. Liz Ann Saunders of Charles Schwab was something along that line today as well. Right now joining us, and we harken back to 1981, she's got Greta Garbo's standoff size. She's got Betty Davis eyes. Gina Martin Adams joins us, going back to Kim Carnes and Betty Davis eyes of another time and place. Great song, Why Is Now, like 81, 82.
Yeah, it's a little bit fascinating because there's really very few instances in which you have a double dip in U.S. history. But clearly we've been in a technical recession for the last 2 quarters. GDP has declined for 2 consecutive quarters. Yet economists are anticipating the official recession to come sometime around the middle to late 2023. The only time I can find in history in which we had a similar sequence of economic behavior would be the early 80s. Of course, economic conditions then were significantly different. Inflation was surging. The Fed was hiking the policy rate to levels that most of us can't even conceptualize at this point in time. Nonetheless, in that period of time, the single most important thing to watch was inflation, because even though the economy went into a worse contraction in the latter part of that double dip, the first contraction proved to be the stock market low, where the stock market low with the reached its low with that inflation peak. So I do think of an inflation. The takeaway for us is, if we are in a period of something of a double dip or an extended period of weakness for the economy, what may matter most for the equity market is ultimately that inflation.
That inflation
peak.
turn. Stephen Ross at MIT wasn't in action then maybe, and factors weren't dominant, but now factors are everybody's love affair. What do the factors say about this battle between bulls and bears?
Yeah. So last week was the first week in something about like 2 months, according to our quant strategist, Chris Kane, in which factors actually performed reasonably well across the board. Most long-short factor families actually outperformed last week in an environment of weakness. It could suggest to us that we're moving back toward a first half type of trading environment where factors generally work, where the value space generally starts to perform a bit better, a bit of a reversal, if you will, of the last 2 months, which have really been dominated by quality, by growth stocks, by tech specifically, and communication stocks sort of resuming a bit of a bounce after their devastating first half decline.
Gina, I'd love to get your take on what Chris Harvey was talking about, this nuance, that perhaps stocks could trade range bound and be okay for the remainder of the year, depending on the meetings that we hear from corporate executives throughout the fall. But then next year is really where we're going to see the weakness. We're going to feel perhaps the slowdown that so many people have expected. Do you agree?
You know, I think that you can make a case, actually, that because stocks priced the 2022 version of recession, according to our models, stocks fully priced a recession this year by June of this year. Have they actually priced that 2023 recession is a really big question. We certainly priced the weakness that exists today. How weak are we going to get into 2023, and what will that look like in an environment where inflation is decelerating? So I do think you've got a period of very rocky chop that you should expect for stocks. I happen to believe that June was likely a pretty consequential low, at least for now. So I sympathize with an outlook that is choppy, and maybe we even retest those lows, but it's very hard to make a lower low until you get closer to an environment in which growth is truly declining or decelerating or likely to really fall off a cliff. Because right now we're in an environment where inflation is decelerating, but growth is decelerating too. That's a little bit different than an environment where growth is actually dropping.
Gina, you put out a chart this morning that I thought was fascinating, that even though some of the earnings per share estimates and that were put out over the last quarterly earnings were better than expected, analysts have been downgrading their estimates for the following 4 quarters. What do you make of that?
Yeah, well, the biggest takeaway from us from that chart is that not only were they downgrading those expectations, Lisa, but they were downgrading them consistently right through the first half of 2023. And it was a broad-based downgrade. So prior to the second quarter earnings season, all of the forward estimate downgrades were really concentrated in the growth space, concentrated in tech and communications and some consumer stocks. What happened over the course of the second quarter earnings season is that the weakness really spread, and it spread to the value index. What we find is more than 70% of S&P 500 pure value constituent forward forecasts actually fell for the next 3 quarters at large. So we've started to see a broadening of the weakness. Now, fortunately for the equity market outlook, that weakness is not turned into an actual anticipation of earnings decline. Those earnings declines happen in 2022. So will we continue to see them weaken to the point where we're anticipating decline is a big question for investors into next year.
I got 42 seconds. Ben Laidler of eToro, the great bull, with a blistering note this morning that the quality of big tech is there.
Yeah.
Are they different?
You know, this is a really big question because big tech has become a loaded word. So what do you mean by big tech? Because if
Apple, Amazon,
if we
and the
say,
others, better than
because
me.
Amazon and Tesla have very different dynamics than say an Apple and a Microsoft, which have very different dynamics than a Google and a Facebook or Meta.
Facebook's not a big tech. Facebook is.
Yeah, maybe we've given up on Facebook, right? Maybe Meta's no longer part of that
TikTok
convo.
this weekend,
But I think that that's the important clarification that I'd like to make is we are seeing a downdraft in correlations among what was formerly big tech, and we're starting to see some distinguishing winners versus losers in big tech, where Apple and Microsoft pulling away from the pack, Some of the others really
Right.
experiencing a very different outlook.
Come back in 2 days and tell us about nat gas. I'll tell you, Lisa, it is absolutely something to see here, and it's really country by country warfare on this spike, isn't it?
Well, right now we're seeing natural gas futures in Europe surge almost 20%, and this is on the fear of the disruption to the pipeline from Russia being extended. That shutdown that is expected, another maintenance of Nord Stream 1 that could be a protracted closure. How much do we see this continuing? How much of a premium do we get baked into natural gas because there is an expectation for disruption, just an ongoing rolling disruption from Russia?
Yeah, it's well-behaved, folks. I'm going to go to the mother of all litmus paper here, which is Euro Swissy, and it's strong Swiss franc, a move from 1.04, plunging down to 1.02, and now down under 0.96, 0.9588 on Euro Swissy. Strong Swiss franc is a thermometer of a beleaguered Europe. Please stay with us. An eventful week, Wednesday to Jackson Hole.